Okay, good morning, everyone. Wow, this feels strange. Very positive, very good. Happy to see you all. You all look fantastic. But it feels strange because, yeah, as we all know, we've been through a couple of years of a pandemic and just having everyone being reduced to little screens. So this is very nice to have everyone back in presence. In any case, thank you all for coming here today to be with us today. We hope it will be a very interesting conference that we'll have, the opportunity to exchange views, opinions, and experience. And we hope that you'll all be leaving here at the end of the day with some more insights and some more food for thought when you go home. And of course, I also want to say a very warm welcome to those of you watching online and those of you who are going to be watching it in the future. It's good to have you with us here today. So as you can see behind me, we have interpretation into languages. There's English, French, German, Spanish, and Italian. You are, of course, also welcome to pose any questions that you may have in those languages, and the people on the panels will be able to hear it. We also have a function for those following us online that you can pose your questions to the panels as we go through the day on Zoom. So there's an account that's called Questions for the Panel, and you simply communicate with that account, and then the questions will appear. We can take them and present them to the panel. Furthermore, I also have the pleasure of telling you that the project website is live as of this morning. So you can go to Fintech and tradeunions.com and see the project website. So there we have videos of the previous events that we have run during the course of this project. And also we have the project report in all different shapes, languages, sizes, and so on that will be presented on that website. So please do follow that. And so here we are, 2 years after this project first kicked off. I'm very happy that we managed to actually have one event that was in person. But here we are. It's been quite the journey from writing the application, sort of conceptualizing what might be interesting for the trade unions to have a look at, and how we could provide some extra input to the ongoing debate. And I think that the project that we ran and the final project report that we can present here today is definitely a very positive outcome of all this work. So I very much want to thank the researchers who worked with us and all the different partners that were with us throughout the way. Today, we will be hearing from a range of speakers. We've managed to pull together quite some interesting panels that I hope you'll find to be inspiring. And of course, as I said, don't hesitate to pose any questions that you may have. Today, we'll be digging into such topics such as skilling, reskilling, how to maintain, retain talent. We'll be looking into what role we can foresee for trade unions when we talk about fintech, how fintech companies view trade unions and view the changes in the labor market, and many more of these topics. But first off, I want to present to you Bertil Rolandsson, who is one of the lead researchers on the project. He comes to us today to present a bit more about the project, so you don't have to listen to me for next long. And there we go. Bertil, I will leave the floor to you. And yeah, thank you all again very much for coming.
Thank you very much. My mic is on, is it? Okay, cheers. Thank you very much. As you already might have figured out, I am Bertil Rolandsson, Associate Professor at the Department for Sociology and Work Science at the University of Gothenburg. And I have been in charge of the coordination of the research activities together with Bengt Larsson, Professor Bengt Larsson at the University of Gothenburg. The idea is that I'm supposed to talk to you about the two reports that we produced within this project this project addressing fintechs and the digital transformation of financial services. It's a project that is, as you all know, funded by the European Commission. It's a set of project partners. We've been collaborating with Europa closely and the Nordic financial unions. The project steering groups is also worthwhile mentioning. They've been helping us out. Paul is here. We have Ella Sjödin, Karin Hallerström, and Kristina Lorenzo Burgos. That have been really important for us in the work with these reports. And then obviously we have the project coordinators as well. The one and only Morten Clausen and Simon Jernberg and Vasilka Lalevska. Thank you very much for all the collaboration that we've been through during this project. The research expertise that have been engaged with authoring this, these reports, there are 2 reports, is with exception from me and Bengt Larsson, which I already mentioned, Associated Professor Anna Ilsøe and Tina Pernille Larsson here in Copenhagen, Professor Jaan Masso from University of Tartu. I see that I missed some names now from University of Tartu, don't I? Katarina, okay. Sorry. And Professor Alex Lea from University of Nijmegen. The questions we are trying to address in these reports are questions that we are all very familiar with. It's about digital transformation. It's about how financial services are changed by the introduction of new technologies, providing opportunities for automation and new ways to share data. It's some sort of idea of digital disruption that has been established along with the introduction of new digital technologies. In many cases, a type of change that appeared to be dramatic. In the case of the financial services, fintech sort of plays the major role in this development, I would say. Disrupting, or the idea at least, is that it's supposed to disrupt established market relations, business model, forcing established actors to sort of rethink how they organize themselves, they organize their business models and the way they conduct work. And ultimately that would have consequences for the way employment relations are unfolding as well. Something which is really important to keep in mind, however, whenever you get across this type of narrative, is that we've seen this before. This is a type of narrative that have been around for the last 60 years. We tend to talk about digital disruption today as something new in a similar way as we did 60 years ago. And of course, we may ask ourselves, how long can we actually keep on talking about this as something new? And I think that is really important to keep in mind, because it urges us to actually not just buy the story, but to look into the data, to look into the story and then test it to see what is correct and what is not correct somehow. Is this really the case? Is it disruption? Or, I mean, we couldn't possibly neglect change. I mean, that's not the case, but what type of change are we actually exposed to? This has to be investigated. In our case, this is something we did by trying to put fintechs into context. We're trying to analyze the development of fintech companies within the context of 4 countries: Denmark, Estonia, the Netherlands, and Sweden. Trying to keep the variations between these countries, not companies, sorry, these countries in mind while analyzing what type of development is it that actually unfolds. The research questions that we've been asking are: how are the natural fintech company markets developing? How can we understand the relation between the traditional banks and the new fintechs? And to what extent do employer associations and trade unions play a role in the employment relations that unfolds? And you can see a sort of sequence, a natural sequence, how we are trying to sort of deal with the topic by just looking at the questions. The first question is a rather straightforward descriptive questions. The second question sort of enables us to deal with the question about disruption, I guess you could say. Given that banks are the most, obvious key players on the market, we need to sort of understand the relation between fintechs and banks if we're supposed to deal with the idea about some sort of disruption. I just noticed, I think I presumably was a bit nervous when I jumped up to the podium because I forgot to grab my water. But anyway, this is sort of the procedure for doing the analysis. This is one of those slides you wouldn't like to look at, isn't it? The immediate reaction you get from the audience when you show this type of slide is that that guy have to go to a course in how you do your PowerPoint presentation. So, but it sort of reflects the fact that it's been rather difficult to actually do the study as well, given that it is an emergent market. There's a lot of things going on. And the only way that you can actually, at this stage, or at the stage at least when we started off, to sort of get knowledge about it was to be explorative and open to different types of sources. We started off with desk research, trying to map existing sources and what they were saying. Reports and regulations, different types of policy texts that came from, in particular, I guess you could say, fintech associations. But we have actually done 38 semi-structured interviews as well, which is a rather big amount of interviews, I would say. Trying to get further into what is actually going on in practice. These interviews comprise representatives from traditional banks, established fintech companies and fintech associations, trade unions, and employer associations. We had this discussion about doing a survey as well, as you all know, that doing surveys are tricky because you don't get the number of answers that you actually need. And this was something that we rather quickly identified as tricky because of the risk of not getting the number of answers that we would like to have. It's a fair share of the people that are working in fintechs that don't necessarily associate with, or they might not even have thought about the unions. And it's a fair share that might not even look at themselves as part of the financial services. They look at themselves as some sort of tech guys. So there were all sorts of complications that sort of directed us towards desk research and semi-structured interviews. But the next step would be to do some sort of survey, I guess. The selection of countries. Well, if you look at these countries, it didn't work, did it? Yeah. The selection of countries, small, medium, small countries with a developed digital infrastructure, all of them, and a natural population that are used to use digital services on the internet. Sort of the perfect selection of countries if you're supposed to be able to identify anything near disruption. If there's some place on earth where we're supposed to find signs of disruption, these countries should be it. The high was a the well-developed infrastructure or infrastructure of digital services was also reflected when we started to sort of map the countries. Sweden has approximately 450 fintechs. 2020 is this. The number of new startups has been decreasing lately, which is something to keep in mind. There are signs of consolidation in the sense that even if the big share of companies are small, there is a direction, or the investments are directed increasingly to a handful of companies. But there is an increase, and a continuous increase when it comes to number of employees within the sector. A similar situation in the Netherlands. About 400 fintech companies. But a few companies appear to take increasingly bigger shares of the market, and also the attention from the investors. Estonia is somewhat different. This is perhaps the most idle, typical entrepreneurial country that we have. A lot of small fintech companies. Given that the country has, I learned, 1.3 million inhabitants, is that correct? It's a heck of a lot of companies. 200 fintech companies on a rather small population. And the number of employees are rather small in all these companies. So this is the true entrepreneurial country then, I guess. And rather dependent as well, I guess you should say, on banks from, in particular, Scandinavia, that are sort of creating some sort of stability on the financial market. And then Denmark, which also have a vivid and dynamic fintech sector, has increased rapidly. And I believe that it still increases. You don't see exactly the same development as you see in the Netherlands and Sweden. The number of small fintechs are still increasing, but you also have big players that become increasingly more important. Is that correct? It's good to have the natural expertise just around the corner. Yeah, the thing about Denmark as well, or the last bullet point, new actors enter the fintech stage. But there's also, and one of the consequences is that there is a continuous differentiation of the services. New collaborations emerge between the actors that shape the development. This is something we see in all 4 countries, actually. No matter these differences, you could see how a new market ecology is emerging, where you have all sorts of interdependencies between the actors, that is established, all sorts of alliances. We're talking about cooperative interdependencies in the study, where you have big established actors that still play a major role and sort of engaging a lot of fintechs, mobilizing them, making them part of their family, if you like, and all based on the new opportunities that you have by the establishment of open banking. This is dramatic in a sense, but it's not necessarily disruptive. You have a differentiation of services, a complexity that unfolds with new services and new players that are engaged with the production of financial services. But it doesn't necessarily mean that we have disruption. And I think one of the major sort of indicators on the fact that this is the case is that the traditional banks play an incredibly important role in all these sort of networks, if you like, these ecologies. You have a situation that sort of reminds me, at least, about the situation that you've seen in big pharma, where you have big pharma companies that attract smaller units that engage with R&D, sort of providing the big companies, speeding up the innovation pace by not being regulated to the same extent with the same type of regulations that you have in banks, for instance, providing or facilitating ideas to move from idea to the market much quicker. But at the same time, then also providing a much more complex arrangement of service productions, both as we talk about in the report, upstream, sort of delivering down to the banks, and downstream between the banks and the customers. This is, in a sense, a dramatic change, but you have continuity in this change also. There's some sort of continuity in the transformation that we identify. And there are also indications of emerging consolidation as well, which is important to keep in mind. An increasing number of small firms still play an important role, but you have an expanding engagement with a few big companies in several of these countries, in particular the Netherlands and Sweden. But I mean, given that this is not a new type of pattern, we've seen this before in other markets as well, you could definitely expect this to be the case in other countries as well. And the fact that there is a decrease in Sweden and the Netherlands as well in the number of startups, even if there are new startups coming, there's a decrease in the number, also sort of signaling that we have some sort of consolidation going on. Something that was also rather interesting, that could be seen as a sign of consolidation when we start to move closer to the labor market, is that we had what we refer to as governance units, including a set of actors, a variety of actors, including fintech associations and communities as well, startup hubs, providing dialogues between the different actors, and facilitating the integration of fintechs into these ecologies, if you like, providing some sort of stability. I heard the other day as well about one of the fintech hubs being disappointed with the unions, because they had to step in and start negotiating social costs and pensions and holidays and stuff like that from one of the countries, which sort of gives you a hint of what these new players can actually do on this arena. And maybe something for the union to join forces with, if you like. But there are also signs of emergent formation of collective agreements or collective organizations. At least in the Scandinavian countries. In Sweden, there's a number of fintechs are members of the employer associations, and thereby also securing collective agreements for the members. And in both Sweden and Denmark, you could see how larger fintechs are knowledgeable about the principles of collective agreements, aligning with agreements concerning pensions, etc. So there are signs, and in Denmark in particular, it seems like it's about to move one step ahead as well, by the fact that we have an employer association that has been organized for the fintech sector as well. Once again, providing signs of continuity, even if we have some sort of transformation that can be considered to be dramatic. It seems to be signs of continuity in this change as well that we have to keep in mind. Concerning the Danish case about employer organizations as well, I guess you could ask yourself whether we may see a fintech union in the future as well. But given the development that we have when it comes to unions in Scandinavia, at least, you have an opposite development, I would say, where you have unions merging rather than specializing on different branches. So it's written in the stars, but we didn't see any signs of it at this stage. Nothing strange, I guess, when it comes to the fact that you had this development in Scandinavia, given that these are the countries that have perhaps the most pronounced industrial relation arrangement involving both employer associations and the unions. You could see how the Netherlands also have a very high coverage when it comes to collective bargaining, but Denmark and Sweden are way ahead when it comes to union density at the same time. So I guess this is no surprise either, but it's good at stages, in particular when you have ideas about a dramatic disruptive change coming, to sort of be able to point out that there is continuity on all sorts of dimensions. What we did see, however, are a lot of challenges when it comes to collective organization in all countries, and they seem to be rather similar. And you know this already, I guess. These people are aware of their value on the labor market. They don't tend to raise their collective voice if they are disappointed. They rather choose exit, even in countries like Sweden and Denmark, where you have a very well-pronounced or well-developed infrastructure for negotiations and agreements on the labor market. And that sort of cuts across all the countries, no matter the variation that we were talking about before. So, if you are interested now, you can find the reports on the web. I think Morten has them. And they are published on.
They are put on the website, yes.
So you can find it from the project
website.
Excellent. I hope I provided you with some information. Even if I didn't surprise you, it could be good at times to not be surprised when everyone else is telling you to be surprised, I guess. Thank you very much.
We can take some questions if there are. If there are any questions. No questions. There we go.
Thank you. Does it work? Yes, it does. Yeah. I'm Christine from Finansforbundet in Denmark. Thank you for a very interesting presentation and some surprises. Thank you very much. I understand that you haven't done a survey, but you did do 38 interviews, you mentioned. I would be interested in knowing, in these interviews, did you get any indication of what could be of interest for fintech employees if they were to join a union? What kind of subjects, what kind of items, what kind of themes would they like a union to discuss for them to be interested in a union membership? Did you get any kind of indication of that, or was that outside the framework of the interviews?
Well, we raised those questions, I guess, but first of all, it was rather tricky to actually get hold of the staff. You were actually to establish some sort of contact with the companies at times, but the people that were working there, we need to know more about them. We definitely need to know more about them. And it was rather tricky to reach them by using a survey. I mean, sending out a survey to them and they can't even relate to the questions. What type of reliability would we have? This is definitely a challenge for future research. But and I think we also have to keep in mind at the time they are on a position on the labor market where they don't even have to bother about the unions, which is a true challenge for the unions now. But when we have a consolidation on the labor market as well, the selection of options will not be as many in the future, perhaps. There will be a change. What type of consequences this will have for the staff is too early to say. But I can imagine if you can't just move from one company to another because you have a few dominating the stage, I can imagine that their sort of awareness of the gains with being part of the union sort of becomes much more pronounced as well. Something which was also quite obvious, in particular when it came to the Dutch interviews, was the fact that the employers were providing a rather high social security as a sort of measure for retaining them. I mean, they would lose them if they didn't offer them good opportunities or good conditions somehow. So it's that is obviously a challenge as well for the union, I guess. We would like to have some miserable conditions in order to justify ourselves, I guess. I'm just joking. So.
Hi, I'm Arne from Norway, Finansforbundet. I don't think it's a question, but it's kind of a remark. You say that, well, they're not really interested in kind of the union, or you don't get the answers that when you ask the question, they don't know the answer on it. But isn't it so that these people, or the tech people, or the tech guys, because they're mostly guys.
Mostly guys, yeah, definitely.
Aren't they quite young professionals?
Yeah.
And then probably when you get kind of older, you understand kind of the context of the world, sort of, and maybe in that context, the unions will be more attractive for them in the future, but not just now when they're 22, 25. Could you
Well, what you
elaborate?
indicate, I guess, is that there are the dimensions of how a market is consolidated as well, related to the fact that we all get older and start to get ourselves a family or something like that, and need to have, we say, parental allowances and stuff, and perhaps deal with the income when we get unemployed in another way that we used to. And I guess that will be the case. But at this stage, yeah, the thing that you refers to guys as well, I mean, it's a gendered labor market in a sense. I guess that would be a way to sort of approach the market, to try to understand it as well, to see how they would navigate demands for some sort of union support. You could expect it to be a rather technical support, less ideological, more of the type of income, we say, allowance, we say unemployment allowance, some sort of insurances that sort of covers up for difficulties in the economical side, I guess. But this is just speculation at this stage. So.
Paolo, Guidici, you will hear from me in the next session. I just have a, kind of question on the role of regulators, because as you mentioned, pharma is similar, yeah, but it's certainly to some extent less regulated, or at least regulated in a way that is not regional. No, the finance is highly regulated, also at the European level. So the question is, in your research, do you look specifically at the awareness of unions on regulation, or on the, let's say, kind of interplay between unions in the regulators and unions outside?
Well, it's an explorative study. So the question sort of covers all sorts of angles that we can have. And given that you have different regimes in the different countries as well, we had to. Sweden and Denmark has a more sort of Scandinavian labor market regime, where the relation, sort of the most emphasis when it comes to the labor market is on the relation between the employer and the unions. Whereas in the Netherlands, the regulators play a much more, we say, pronounced role. So we had to cover it all somehow. We can't say we look at that, but not at that. And then you have obviously Estonia as well, where you have a situation where the union density is very low, and the regulation when it comes to the labor market is not that pronounced either. So there are important variations between these countries that allows us to detect changes in relation to all sorts of conditions, despite the fact that these countries are, we say, similar in the sense that they have a very well-developed digital infrastructure and a population that are used to making their business on the net now. I don't know if that answers your question, but you see that there are differences. And I guess, I mean, next time, Morten, when you set up a project, maybe you could engage some more researchers from France or Italy, or where you have a much more sort of continental approach to the demand for regulation in comparison to the Scandinavian approach that has been dominating the discussion at this stage. And you could see some of the questions from Alex, who unfortunately couldn't be with us today. He was sort of trying to get us more and more engaged with the question about, well, the state is important as well. We have to look at the regulations. But this is presumably something that we could develop. So, but nevertheless, there's a lesson in here. In the end of the day, it's the digital transformation of the business that will sort of drive the change, with different consequences in different countries, but nevertheless, it might not be as disruptive as we expect it to be. Yeah.
Cool.
Thank you very much. Thank you for your questions as well. I'll leave the stage for you, Morten. Or
Thank you. Yes, indeed. And if I could ask the panelists for panel 1 to join me on stage, then we can get started. Bit of water. No. Okay, fine. There we go. Great. So thank you for joining me. So let's launch into it. The first panel of the day. Basically, we thought that we would have a bit of a discussion with the rest of the researchers who've been working on this project as well, to have a look a bit more at the national specificities about the country reports that we had done during the course of the project. And yeah, as Bertil mentioned before, to sort of try and dig out if there's some more differences between the different countries, what kind of impact those differences have on the labor market and on the fintech sector, of course, and especially on the approach the trade unions could take to integrating the fintech market more. So I have with me here today, first from the very end there, we have Paul Suilen, who comes from FNV from the Netherlands. Paul is also working with the Dutch Central Bank, and he replaces Alex Leer, who unfortunately could not be with us here today. So thank you very much for stepping in, Paul. Then we have Anna Ilsøe, who's an associate professor at the Copenhagen University, and has been working with writing the Danish report, of course. Then we have Jaan Masso from Tartu University. And yeah, very happy to have you with us here today as well. And then we have Bengt Larsson, who's been working directly with Bertil on the Swedish case and also writing the report as a whole. So thank you very much for being with me here today. And I have a little question for you first. Maybe Anna, would you like to talk for a couple of minutes about the Danish case?
Yeah.
If you have any additional points you would like to highlight.
Yeah, of course. So I did the Danish case study together with my colleague Trine Larsson down there, and we were very happy to study this emerging field of industry in Denmark. It was really, really exciting. And we did a few case studies. We did a case study with Luna Bank and with Nord Investments. And we interviewed many of the people involved in the new fintech agreement negotiated in Denmark, which I think, and Trine thinks, is a rather unique feature. And we also visited the Copenhagen Fintech Lab and the whole environment around that. Just a little bit of background. So I have two main points from the Danish case study today. I think one of the things that was very fascinating about the Danish case is the institution building done at the Danish union Finansforbundet. So quite early, they invited a number of fintech companies to stay in their house, physically, very practically in their house, and created a fintech hub there. And I think this has been an advantage for all actors in the Danish fintech industry. because it obviously gave a relationship between the union and all the fintech companies, but it was also a possibility for the union to get knowledge about these new companies. You got kind of an overview of what is going on, because it can be very fragmented. As Bertil said, there can be many smaller startups placed here and there in the different hubs. It's also the case in Denmark. We have fintechs in the Camp and SureTech hub. We have in Symbion, which is a biotech hub. But Copenhagen Fintech Lab is the biggest hub for fintech companies, and it's situated physically in the union. So I think this institution building has been pivotal, also because it's an environment that has become a tripartite environment. So also the Employers Association, the big traditional banks, the municipality of Copenhagen, a variety of actors have joined forces in this initiative. And I think it's really, really interesting to visit this lab. I would advise everybody to do so if they haven't done so. And I think also this hub or lab played a pivotal role for my next point, which is the new agreement. And I think this is really fascinating. And I think the ability to create a new agreement in such an emerging field as fintech shows the innovative power of the Nordic model of collective bargaining. So what they did was they negotiated a framework agreement that allowed each fintech company to have their own local bargaining on pension, on various aspects of wage and working conditions. This flexibility, I think, is very innovative. So you create space, room for maneuver in the company to have flexible conditions in the fintech company, which they want. They want flexibility on working hours, on various issues. But at the same time, you're covered by a collective agreement. And this is actually a sector level agreement in the way that you have 3 fintech companies negotiating this agreement and creating an employers association of fintech. Obviously, this doesn't cover the whole industry. Another remaining challenge is how to organize the workers covered by this agreement in unions. It's still a challenge that needs to be solved, but I think it's an early sign of a very innovative response from the Nordic collective bargaining models, and a very promising signal. Yeah, I think that's the most interesting features of the Danish case.
It is. Thank you very much, Anna. So I guess I'll pose the same question to you, Jaan. Are there any specific things you want to highlight from the Estonian case?
No, maybe starting from what was already said, that why actually Estonia ended up in this project. I don't know this background, but what, as you saw already, it's quite impressive that Estonia is clearly much smaller economy than all the other ones, even so all are small countries. But actually the number of fintech companies was quite comparable to other countries, 200 around. It's a little bit tricky to define who is a fintech, and we have different lists, but roughly 200 companies. Most is a very small companies, but actually now also some emerging, a larger one. And internationally, maybe TransferWise or now Wise is most well-known one that has more than 1,000 employees. I think it was also mentioned in other parts of the project, and they went into London stock exchange last year, and Estonia got its first billionaires thanks to that. So just exemplifying, and that actually is very comparatively very important sector for Estonia compared to other countries. And more generally, we say that if you consider these most highly valued startup companies, so-called unicorns, Estonia has is in a per capita place now in the 2nd place in the world after Israel. So it's really quite impressive. And that was also told that actually in other countries we see such kind of consolidation and maybe less startups and so, but not so much in Estonia. So I would say that there's a kind of let's say positive feedback loop, or this process is self-reinforcing. Like in Estonia, very much is started from Skype. We always thought that was programmed in Estonia, and their investors previous investors start to invest into new startup companies, fintech companies, other companies, also providing advice and guidance. And this way, we still see a number of companies emerging, and so it's more uncertain for the future. And I have to stress background where it all came from. So naturally, we are only post-communist economy. So in the previously, financial sector was very undeveloped, and so we kind of in many respects started from zero. And so like in innovation studies, I think they use this concept of latecomer advantage. So actually in some sense very much we became straight digital and kind of left out certain stages of the development. And so already in the 90s there were internet banking developed and so on, and also very strong support from public sector, like development of ID card, development of digital signatures, that actually all provided this necessary infrastructure for this kind of development. So it was maybe not so surprising, this very strong emergence of fintech sector. What to add, on the other hand, it's we heard these positive cases from Denmark. Actually, what concerns industrial relations, maybe this Denmark case was most helpful. While in Estonia, as told, especially in banking sector, the collective bargaining is least development clearly, not only in these 4 countries, but I think we refer to Euro Foundation report. So basically among all countries is least development, and there have been actually some attempts to organize either at the sector level or bank level, but that have met some kind of negative attitude. No, just an anecdote. It's not concerned here, but I think once the employees could not organize a union, and so they went to some demonstration in Stockholm to show that, look, in Estonia it's not possible to organize a union, which is unthinkable in Scandinavia, but just showing that there will very big difficulties in organizing unions. So which also puts all this project for us a little bit different perspective. As I understand, Scandinavia is now that traditionally financial sector is quite well organized. One where was also covered by collective bargaining. Okay, Netherlands was a bit different, but still, while Estonia, even the banking sector is very unorganized. So it's a little bit different perspective now, how to approach digitalization. How would say so.
Very good. Thank you, Jaan. And Bengt?
Yes.
Maybe want to say a few words?
Yes, thank you. So the Swedish fintech niche, or niches, perhaps we should talk about this, as fintech is such a differentiated kind of business. But as Bertil said, there are some indications of a consolidation going on in that fewer new entrances per year than previously, whereas the business is still expanding quite strongly, mainly through scaling up of existing fintechs then. I mean, according to recent estimations, and this gives the picture, the number of employees in fintech companies in Sweden, if we speak broadly of fintechs, has grown from around 300 at the break of the millennium up to somewhere in between 6,000 and 10,000 today. But the majority, 60% of employees are still employed in companies below the size of 10 or around 10. 30% are employed in larger companies above 200 employees. And then as an example of the difficulty with demarcations of fintech, Klarna has over 3,500 employees, but also recently a banking license. So is it still a fintech? Is it a neobank? I mean, the sector is changing. And the workforce in Sweden is then mainly male dominated, 70-75%, 25-30% women. The majority has high degrees in finance and management or IT engineering. I mean, the best recruitment is to have those dual competencies, and there are, as in other countries, requests for more educations combining finance and tech, since this is a great need. Quite some come from the banking and finance industry. A third is recruited from within the sector. The rest are perhaps younger and of the more other kind of tech firms or newly educated. The majority is recruited from Sweden, 80% around, while 20% comes from abroad. Of course, as in all these countries, there is a highly digitalized environment with consumers are expecting flexible and app-based solutions. I mean, based on the long history of internet and online banking. If the financial or banking sector in general is quite well organized, with around 65% trade union membership and 70% collective bargaining, things are of course different in the fintech niche. Smaller companies would be rather unorganized, small startups in terms of structures and employment relations. But of course, the larger ones that have scaled up, they have to have some kind of HR similar functions and structures. And one of the medium-sized we interviewed said, well, we don't have a collective agreement, but I mean, I come from the banking sector in the HR department, and we keep a close eye on the levels of the agreement and try to stick with that in pensions and vacations and other things. And as far as for the wage levels, I mean, we keep the benchmark updated since we recruit that much, and the employees know their value and are quite mobile, and many of them young, and they want to have fun at work. So the corporate culture is, and this I think was also very emphasized in the Netherlands, the corporate culture must be good for these employees. You have to provide what they expect from work, and then they may perhaps work too long hours or something like that, but on their own choice. And they also have to organize, not in a formal way, but professional development to give support for individual flexible professional development among their employees, since that is expected also to exist within the environment.
Last point.
Yeah. So thanks.
Oh, sorry. Okay, thank you very much. And then as the last point, Paul, in case you have any points that you would like to talk about from the Dutch case. I know that you weren't the one writing the report, of course, but nevertheless, you might have some observations.
I can talk about some highlights out of the report, and Alex did the research, and I'm from my supervision standpoint, maybe I can talk a bit about the landscape. We also have a big fintech landscape in the Netherlands, but like Alex pointed out in the report, it's like more than half of it are companies that employ less than 10 people. So it's comparatively small companies, and we have a couple of very big companies. And what Bengt also said, the big companies are aware that they have to give their employees some benefits. You know, it has to be fun to work there. They have to have possibilities to develop. Otherwise, they will switch to another company, because the labor market at the moment is like supply exceeds demand. So, you know, I can go anywhere if I have capabilities, and they will do that. And if you as an employer in a bigger fintech company don't provide them with possibilities, like also with childcare and allowances and kind of that, you know, you will lose it in the market, and you will have troubles to get employees if you want to scale up, you know. The other thing in Holland typically is like the organization, the union organization in the traditional financial sector was already pretty low. Alex pointed out it was 6%. But the contrast is that collective bargaining is then pretty high, you know. That's a very strange discrepancy, but that is historically been like that, you know. But if you compare that to the fintech sector, in the fintech sector there is no collective bargaining, and this union organization is non-existent, I would say. You know, it's maybe 0 to 1%, and it only will grow if you go to the bigger companies, and the bigger companies will not provide the possibilities for the employees that the employees want, you know. And as long as the labor market is like it is, the employee doesn't see a need for a union membership, because he can switch anytime. And that's maybe the problem. And then I envy the Danish organization, how they did that, you know, to get the hub into the union building. And then you can start from that, you know, and then you can start up some collective thinking about what can we do for the employees, and that also install that into the mind of the employer, you know, like the company. So that would be a good starting point, I guess, or a point to build for more unionization or awareness about the fintech environment and how we get the union, or can get the union involved in that environment.
Mm-hmm. Okay, thank you very much. And Bengt, I think you had a...
Yes, I wanted to add one thing which I missed, that collective agreements are not non-existent in the Swedish fintech niche. Since we checked with the employer association, both in banking and the more tech-oriented and entrepreneurial startup employer associations, and we found a number of companies being members in those, which then counting, and here the figures are very vague and very rough approximations, but counting the number of employees in these companies and relating to these figures I said at the beginning, how many employees are there in fintechs in Sweden. So a rough estimation would be between 12 and 20% of the fintech employees have collective agreements. So, and I think this is an interesting connection to the Danish case, in that we might see the organization on the employer side. But there is no fintech employer association yet. But I mean, these are the sides to think about: union organization and employer association organization, of course. Yeah.
Thank you for that observation. Let's jump into some of the questions that we had discussed for this panel. One of the ones that I wanted to ask you was, do you believe that the question that we've tried to ask with this project is a relevant one in the context? And is there another one that you think we maybe should have been discussing, or that could be a good one for a follow-up project, something like this? I don't know. Anna, maybe you want to go first?
Yeah, so fintech is only part of what I research. So I also study a number of other types of digital companies, not least digital platform companies, together with Trina. And we just have a book coming out after the summer holiday on the platform economy in Denmark and the Nordic countries. And I see many similarities in what's going on there and here in fintech. And it made me reflect on a number of things. First, obviously the tech influence, but also the age of those people involved. And I think it's interesting, for instance, the Luna case, when we interviewed several of the directors of Luna. So both the workers there are young, the customers are young. So there's something about age. That's something we also see in other digital markets. But then as these companies grow in size, I think you also used the word maturing, Morten, they start to see they need some kind of structure around what they're doing. So I think there's an interesting hope for that many digital companies, not just in fintech, but due to the fact that they start off in a young market with young customers, young workers, maturing, scaling up, they will start looking for structures to organize their workers' wage and working conditions, how to negotiate wages. It's very time consuming to do it individually all the time. So actually these structures we have already, like collective bargaining, unions and things like that, are usable. They come to realize that. And I think that's a point of opportunity for all the organizations we have involved in this. When some of these companies scale up, they will be looking for some of these structures. And I think that's also what we've seen in the Danish case with this new Employers Association in fintech and the new agreement, that it's some of the largest fintech companies that start looking into this and say, we need some kind of structure here, but also what they need is legitimacy in the market. Because, for instance, the Danish market is very highly unionized, and many of the traditional players in finance are covered by collective agreements. So when you become a large company and you should have legitimacy in the market, you start looking around. Well, all the other ones, they have collective agreements, they have unionized workers. How can I, if I want to become a real bank like Luna, how can I be a legitimate player? So I think this will obviously depend on the existing level of union density and collective bargaining coverage. But I think this point in time when you scale up, there will be two mechanisms. One is the legitimacy in the market, depending on what you have already in the market of organizations and union density, but also the age of your workers, the age of your customers as you mature. That will be a window of opportunity. And I think that could be studied more broadly with many types of tech companies.
I sense a very cross-sectorial, very broad project coming up. Very good.
Might be an article in the future.
Indeed, yes. Very good. Let me ask you then, Jaan, since Anna just mentioned that there's this aspect of legitimacy when companies are growing and then you start looking for ways to get this legitimacy. In Estonia, would that be sort of the same case? Would there be some way for these companies to seek legitimacy, and would they be interested in doing it?
That might be well the case. As said, still by and large, they're very small companies, which is also explain all this, that they don't feel this kind of more structure and legitimacy and bargaining. Now, I think this reference to age is relevant. No, just mention one counter argument that I have heard sometimes in some earlier interviews, that looks maybe this new generations are different. They don't want this kind of typical traditional stable employment relationship or something like that. But no, okay, you can probably disregard this argument, but just showing that what has been mentioned by, I think in this case was from the side of employers. But no, that definitely in this kind of national context, it might be much harder to implement it, like you heard, or like I think it was mentioned in Sweden, that even if you don't have collective bargaining particular company, it's still somewhere there, and it's a benchmark still in certain decisions. Like in Estonia, even that is not the case, but which makes it much more challenging. But one thing it was definitely very much mentioned in our report, and what is also maybe union should notice about labor scarcity. Of course, these IT people are in need everywhere, all countries, but especially mentioned in Estonia. And of course, it's solved by certain institutional no, in some sense, migration restrictions are very strict, but okay, there are exceptions for IT people. We have a special startup visa and also exceptions. But despite of this, there is labor scarcity that hurts also growth. And those other things I mentioned about human capital, like too little of retraining, and so that the company says we don't have workforce, but then maybe disregard certain opportunities. And maybe that's more general one part also where unions could have a role. So that, as I said, maybe these issues are relevant everywhere, but I didn't see in other countries mentioned it so much. Maybe especially there compared to the size of the country, also IT is relatively larger part of the economy.
Mm-hmm.
And so scarcities are even more acute.
Yeah. Okay. Thank you very much. And Bengt,
Yes,
reflections on the research question?
Yes, thank you. I will begin by pick up the discussion on legitimacy, and I think also the previous question on regulation, which was raised to Bertil. I mean, we have regulation and institutional structure both on the production markets of financial services and products and on the labor market. So I mean, and of course, I mean, finance and our money and the company's money, this is serious business. So I mean, for fintechs becoming established on the national markets and growing, they have to be considered legitimate actors, serious actors. And one part of this is the financial regulation, which may cause trouble, of course, in the cooperation between fintechs and banks, since banks may become back-end distributors of companies they cannot really control and that kind of stuff. But creating legitimacy in the context of Denmark and Sweden, at least, has to do also with acting in coordination or in relation to the rules on the labor market and the institutions. So, I mean, there would, for companies growing and scaling up, there would be need both to be accepted on the production market level as legitimate and serious actor and on the labor market. And this is where I think I'm coming to if the question answered were enough, and so how to move on in this. I think we can reconnect to a previous question, which is very relevant. What do the fintech companies and employees need in terms of structures and support? Obviously, in Denmark, they needed workspace and a physical structure for community. That was an important thing for trade unions even to provide. So I think, but to these kind of issues, I mean, what are the important issues for work-life balance, pension-related, at least in a couple of decades, will be perhaps employment contract, etc. What are the important issues for employees, and what are the important issues and structures support for the companies? I think in order to be able to come down and get access into these quite busy and small companies and employees in them, you would have to have a joint setup structure with trade unions, employer associations, and hubs and labs and fintechs associations, jointly trying to find the relevant questions that would make an interest and perhaps make a difference for the ones actively engaged. So I think that is something we couldn't, I mean, move into the employee level of interviews or surveys here.
Yeah. Okay, thank you very much for that. That's the second time on this panel I hear that we need to have a broad range of people included in all these undertakings. So that's definitely something we'll take forward. Paul, anything?
I fully agree with Bengt and Anna. It's like size matters, and size also gives an opportunity to go further in researching or developing new relations with the employee and the employer. You know, And I guess the union has to put more effort, especially in the Netherlands, to develop these relations. Otherwise, you're outside the game. You know, you miss it all, and you can't get involved. And that's the only way to get involved, of course. And also maybe in the Netherlands, if you have a certain size, you need to have a work council, and a works council could be a very good entrance point to start that relation with the union.
Thank you, Ben. Yeah. You mentioned it already. Okay, very good. Okay, then. Great, but then let me sort of segue into. During the interviews that you've conducted on the national level, was there anything that really stood out to you where you had that aha kind of moment, or the very surprised moment when you were doing the interviews? Sometimes that happens. I don't know. Jaan?
I don't know, it was a so big surprise, but no, we understand, of course, that banks and fintechs are different, and also what came out from all countries one way or the other, that there is cooperation. Rather than more disruptive things that fintechs took over banking market, but somehow they mentioned some of the difficulties, like organizational culture, like that fintechs are more oriented to very fast growth, and some even use some words like burning money, and but actually banks have some kind of other expectations. And on the other hand, it came also from side of employees that actually, now of course I mentioned that also kind of startup boom in Estonia is not generally regarded as positive, like kind of self-reinforcing, but in some interviews, maybe I think it was bank representatives also said maybe it kind of little bit distorts workers' expectations, not in terms of wage, but maybe some other things, that everything should be very nice and cool. And they actually even saw some negative things from this startup boom in the labor market, not just some scarcity, but kind of that people's expectations come up, which is in a way which is not very suitable for banking. So it's not a big surprise, but still some negative sides of this startup boom a little bit were mentioned.
Okay, thank you. And Bengt, anything from the Swedish side?
Yes, I think the two things that stood out that kind of surprised, but were very emphasized was on the one hand, or three things. The first is that we had such similar relations and developments in certain senses in the four countries, which stabilizes the results when you compare in this way. But I mean, the changing attitudes over time, we had from both sides, banks and the fintech representatives, the discussion of the cooperation, the collaborative ambition today as compared to 10 years ago. And the risk, the big threat, I mean, the strong competition still being between the banks, but the threat from the big tech. And if fintechs teams up with big techs, I mean, it's better to scout for your own fintech solutions, and if you are not possible to team up or partner up, you can sort of buy the solutions and adjust to your systems and principles within banking. So that was one thing, and the other is the strengthening of the increasing organization of the fintech community, which connects to what I said before. I mean, with a growing number of not only loose communities, but hubs and physical workplaces and associations, you get, they kind of integrate and coordinate knowledge and practices, not only within the fintech niches as such, but also in relation to employer association, regulators, and other state actors, in relation even to the European level, with representatives taking part in consultation and so forth. So, and I think in the Swedish case, this might be, I mean, part of a development which might lead to the Danish situation with the organization and potential regulation or in collective agreements as well.
And Hannah?
So to build on further to that point, I would say one of the maybe not surprises, but I think very interesting aspects of the digital economy, not just fintechs, is the role of physical space. And I think that's really fascinating because we have an emerging economy in so many fields where you have digital companies. You could work from anywhere, and many people do. We've had a corona crisis where everybody worked from anywhere and so on, telework, so on. And still we see the importance of physical space, the importance of even smaller fintech companies sitting next to each other. It might even be competitors, but there is something about capacity building, knowledge building, developing an industry, developing collectivism, where physical space matters. That's one important take home. Another thing I would like to mention, because these beautiful partnerships, as Bertil also mentioned and Bengt also underlined, where traditional players in finance, banks and so on, and smaller fintechs have this cooperative relationship. They cooperate, they need each other for various reasons. So the larger players, they have the funding, they have the legal departments, they have clearing, they have all the finance regulation, they have knowledge of new markets and so on. And you have the small fintechs who are innovative, dare to do things, a lot of tech people and so on. So it's a beautiful marriage. But I would say one of the interesting things in the interviews we did with the Danish cases was that there are also very big challenges in that. And that these partnerships are joined, but also split. And you take new partners on and so on due to one of the important challenges is tech. So you have different tech infrastructures in traditional banks and in fintechs. Fintechs use cloud-based technologies. Traditional banks might use something else. And during these partnerships, it becomes such a challenge that you have to change your partner. So it's not always a long-term marriage. And there are challenges involved in this. And I don't know who should solve this, but it's a challenge because they have so many mutual interests. But if tech splits you up, it's tech is the most important thing.
It's
so
the foundation of the whole thing. Yes, indeed.
So that was also very interesting, I think.
Okay, good. Yeah, and I can imagine, especially over the last 2 years, on the point that you mentioned about the space and sharing the space to be able to share ideas. And I imagine over the last 2 years, it's been rather difficult. Do you have any indication of the impact that it's had on them, having to not be able to physically meet?
No, not really. No, sorry.
No. Okay, but yeah, maybe also something for other countries to pursue, sort of creating these joint spaces where you can create the innovation. Okay, thank you. Then let's we can open it up to the floor in case there are any questions from the floor. At the moment, yeah, sure, Chris. Wait for the microphone, please.
I just would like to refer to what you said about the importance of physical space. It's good to be back here to see one another again. So I think that physical space, it remains important, seeing one another again from time to time and having contact with people in the same sector and so on and so forth. On the other hand, the whole issue of distant working is getting an international relation. My son has been distant working from Cape Town in Belgium, and that is very nice for him. How do you see that evolution in that context? What would how relevant would national aspects remain if distant working gets an international dimension?
big
Anna,
question.
yeah.
It's very difficult to answer, I guess, you know. If I look at my employee, the Dutch Central Bank, you know, we are already struggling with how to form the new way of working, we call it the hybrid working, and the working at the location of the bank, you know, and then they leave it to the manager, and the manager is looking at, yeah, what should I do? What are you doing? And how should we give this a new form? And it has to grow organically, I guess. And after a year, we can look back and think, now, okay, maybe this is working and this is not working. You know, we have to look at it, how we go from this point when we can meet physically again to over a year, and then think, okay, sometimes you work from home and sometimes you work at the office, you know, and then we have to look at it, how does it work? But then if you transpose that to an international level, I don't know, you know, it's we have to learn from each other.
Bengt, yeah.
Yes, and I agree with this. We have to some degree get back to physical meetings, since, I mean, as we all know, things happen. And this is also part of the organization of the fintech communities and their way to get in touch with, that might be the bankers associations or employer associations or regulators, and the creation of I mean, these kinds of events where the different actors get to meet. Even their physical spaces are important, since, I mean, this would be the way to coordinate all this movement going on, and use, even if you don't have the scale in the company, you would use the knowledge and the scale of the niche to go forward. Yeah.
Yeah. All right. Anna?
Yeah, so I think this question about distant working is really, really interesting. And I wonder whether we have tested it enough during the Corona crisis, in the sense that, to my experience, what works well with distant working is maintaining relationships. But it's really difficult to build new relationships, build trust. And I wonder if innovation is possible in the same way only on Zoom, or compared to meeting together in a room and develop ideas. Because it's a kind of one-way communication. You cannot talk in a group and things like that. And I don't know if we've really tested that, actually, because what happened during the Corona crisis, to my experience, was that you were building on the relationships you already had. Yes. And I'm not sure we really build a lot of new relationships, but yeah, that was just my reflections.
Yeah, Jaan?
As to teleworking, I think this study did too much in our so I don't know exact national context, but I agree. I recently heard the keynote speech of Nicholas Bloom from Stanford University, who is one of the renowned researchers of teleworking. And as if I remember correctly, now his message was that the immediate impact on productivity, whether I work from home or telework, is not so huge, but exactly the same things, like, let's say, about building relationship, but also building human capital and passing experience of old employees to new employees. Yeah. And these things are actually much more relevant. And also, but what actually came up from our interviews, it was mentioned trust. Actually, no, COVID-19 was not a separate topic, our report, because tech companies, they were less affected, or even not positively affected. But what actually came up, that actually inability to travel actually hurt some companies' growth, because really to establish new customers, new relationship, you can't do it via Zoom. You have to meet people, and that was not possible. And it's many of these companies are really very small, they need to grow, and that turned out to be difficult due to COVID-19. That's another way where actually COVID-19 kicked in.
So it's cheaper on the cost in the short run by not having to travel, but then in the long run, gonna cost you more. Indeed. Thank you. We have another question down here.
Okay, thank you so much for the discussion. My name is Paula Kjellin from the Swedish Bankers Associations. And this is a really interesting area, of course. We're working with the fintechs and we're working with the banks, and we do collabs and we do hackathons and all that within our spaces. But I'm also, of course, within this people in the room and maybe on the screen. Today, we have a lot of university people here, professors and so on. So one of the stories you often hear from the fintech companies that they met at the university or met somewhere during the school time and started a company. So that is basically where they first start out. And that's, of course, a great space to start in. So I'm just thinking about that progress from the first idea, where it often happens during the university, where you have a lot of time to spend with your partners. So yes, the obvious question here is, how do you, because I think you have been thinking about it, how do you use that space and how do you transform it to go to the next space, or how can we work with it closer? Because that is a partner where I miss at my association with the universities. So if you're here today and want to work with the Swedish Bankers Association, I'm here.
Good to know. Thank you. Bengt?
Yeah, I can say a few words. I mean, the situation is quite good in that the universities are forced to cooperate more and more with the surrounding society. So, I mean, this is just like the growth, if you talk about, I mean, the Stockholm Business School and Hyper Island and some growth areas for ideas for entrepreneurial fintech. If they kind of go into the Swedish Fintech Association and the Fintech Stockholm Fintech Hub, and you have, as is very good, the communication and invite to different areas. This would be could be expanded to the universities as well. I mean, I know there are such things going on quite much, but it's kind of a win-win situation, since I mean, you can use in Sweden the state-funded professors and lecturers and researchers to make certain, produce certain information that is important for you. And they can get points at their departments from having this collaboration. So I think that will be hopefully stronger in the future.
So yeah, again, going back to the collaboration. Yeah. Anyone else want to pick up on this one, or shall we?
I can just mention, I think that Copenhagen FinTech Lab, the organization, they also have a policy initiative, has a partnership with the University of Copenhagen, some of their educations. I don't remember clearly which ones, but I know there's some cooperation going on. And whether it's that strategic, as you mentioned, as I hear your question also as universities should also facilitate these startups in a way, or encourage students to do that, because it's an important incubator of these companies. And there should be a link from this to the hubs, perhaps in some sort of way. I'm not sure in the Danish if it's like that, but it sounds very reasonable. And there might be more initiatives that I don't know from in Denmark on this.
Thank you. Okay, we are getting close to the break. So before I release you all, I am going to ask one last question to each of the panelists. If there's one thing that you would like to share with the audience here today, and for them to sort of take away from the discussions here today and to think about, shortly formulated, Bengt, what would it be?
Yes, I think it is, and this is nothing new, but it's very strong tendency in current research and publications on fintech and the financial services market in general, to view this from the ecological perspective as a market ecosystem with this not being disrupted, but new forms of constellations of cooperation and competition and so on. And in connection to that, not only think and focus on the established big traditional actors, for instance, on the labor market, but to, in one report, we talked of these as governance units to be able to use kind of different organizations and associations within one umbrella concept, but to take those actors into consideration and bring them on board in collaboration and dialogue. I think that would be my...
So keeping an open perspective and really looking at the whole ecosystem. Yeah. Jaan?
Maybe the main what characterizes very much the Estonian story is that indeed that we don't see yet such kind of slowing down of the startup of new companies and no consolidation yet. And in this sense, it interesting what's going on. And generally, I think what's repeated again and again, that basically these are quite well-paid employees with good working conditions, which also makes their unionization maybe more challenging. But I think that especially it popped up in Estonia, that actually even say, at least given our calculations, even has a higher wage levels than in the banking sector, which is definitely challenging. I think it was different, if I remember correctly, in Netherlands. So that especially a challenging situation.
Okay, thank you very much. Anna?
So I want to go back to Bertil's first comment about is this new, is this disruption, and digitalization is changing everything, and we've heard that for 60 years, and what's going on is more evolutionary. And this whole discussion, I think we've been very focused on the company side. New companies, new business model. What we need to do now is also focus on the worker side. Because we have new generations coming who are looking at their career and their working life in a new way. Might not be disruptive, but it's something we need to reflect upon. And these new generations, they want a more flexible working life. They want more autonomy. And obviously knowing more about these workers, also in fintech, but also other types of digital companies, is hugely important for all the institutions we have in our societies, unions, employees associations, and so on. So I would say that's perhaps the next project.
Good, thank you. And Paul?
I agree with Anna. It's the employers are very important, and also the union has to look at what is the new kind of employer. What kind of type of employer is that? What are his needs or her needs? You know, and they have to focus on that. You know, like flexibility, autonomy, and other things. And then I have a general observation. It's more like if you look at the whole fintech area, it's like the lack of diversity. You know, it's how many women are working in fintech. That's less than 10%, I guess, and that's also an area for improvement, I guess.
Okay, thank you very much for joining me on this panel today and for sharing your insights. I hope you all found it interesting. We will now take a break. So hopefully everything should be set up outside. And we will be back here in 15 minutes, I believe. Indeed. So there we go. I just have a few announcements. One, when you leave here today, please leave the badges and lanyards. We need them afterwards. And yeah, was there something else, Lucy, I had to check out? Yes, indeed, by all means. If you haven't checked out from your hotel room, please do so, because otherwise we're going to have an issue. So there we go. Thank you very much, and see you after the break.
Yeah. Now we will return for another panel debate. This time we're going to be talking about the social partners' reactions and reflections regarding the project report. Also in relation to this, the different challenges and opportunities that seems to be often associated with this emerging fintech sector. It has been raised a little bit by the academics in the previous session, but now we're going to hear from the practitioners' perspective, and including what do they see could be the role of social dialogue and collective bargaining in this context of regulating various aspects in the emerging fintech sector. And for this, I have this distinguished panelists here, and I'll just make a very brief introduction. And these are, I apologize in advance if I've got it wrong, because I was sitting Googling people because I didn't have all their CVs. So the first one is Massimo Mensi. Right. He's the head of the department or director at the Global, and also policy advisor in relation to digital technologies. You have a background in sociology, but have moved more and more into the technological area. And you've been affiliated both with the Italian trade union as well as the European trade unions for decades or many years.
Business intelligence you made about me.
So, yeah. And the second panelist we have is Professor Paolo Guidici. Right?
So the surname is difficult. Is it Guidici?
Guia.
So
Okay.
I would say Guidici.
Guidici. Okay, but you're a professor.
I know.
I apologize for my mispronunciation. You're a professor of statistics, but also have worked extensively in the finance market and with relations to management. You're widely published, and your different publications, as far as I understand, has been within the area of algorithmic management, different data mining, and in combination with the financial markets and the different risk assessments associated with that. So welcome to you as well. The second panelist there was a little bit more difficult to find via Google. You are a bit more hidden, Oliver Hauser, but you are Gewerkschaftssekretär at Ver.di, and
Exactly.
you worked a lot on these aspects as well, on digitalization, but also, as I can understand, with my limited German, on the youth and the new forms of work emerging.
Yeah, exactly. Yeah, more hidden, definitely, on purpose, to be honest. Yeah, working for Ver.di, second largest trade union in Germany, actually coming from the tech side, but was the lucky one to start organizing one of the big fintechs, N26, in Berlin.
And our fourth panelist is Simon Schou, who was we were very fortunate it could step in when Thomas, unfortunately, was unable to attend. Simon is the Chief Innovation Officer at Copenhagen Fintech. So some of the questions that were raised in the previous session, you will probably be able to address in this session, so we'll bring them back in. You also have a background in sociology, but also have moved, correct? Or am I wrong?
Not completely right now.
No, I'm sorry. But
sociology is super broad.
Yeah, that's true. But you've been part of both the banking or financial service unions for many years. And a few years ago, you moved into the fintech when it was established. Is that correctly?
Yeah, I was an early employee at the Financial Services Union in Denmark, where I was, among other things, in charge of recruiting IT workers for the union. Yeah.
Okay. So Google needs to do an update here because some of the profiles are not totally up to date when you're Googling around information, but it's amazing what you can get, right? When you don't know people. But as a final comment, thank you very much for joining in. And I thought the first question could be to open up, since we're talking about fintech and we all assume we have a common understanding of what is a fintech company. So I think I would open the floor with asking you, what do you understand as a fintech company? And I think that's very center stage for when we're going to talk about different challenges and opportunities associated with that. So I don't know who would like to go first.
I don't know, we can start from here.
Yeah.
And if it's not an issue, as I anticipate to you, I would shift and switch on my Italian, since as a trade unionist, I'm supporting also as workers the interpreters. So I would choose my mother tongue to express and to have my intervention here today. Penso che dare una definizione di che cosa
I believe that to provide a definition of fintech from a trade union standpoint, it is very difficult because we as trade unions, we have a structure which doesn't help us. Fintech is a space of contamination, and it represents the future. It depends very much on the perception of the workers. It would be very interesting to ask the workers and ask them, oh, do you feel more of a banking sector or of a fintech professional? That's why UNI works with the classical sectoral structure, and fintech is on the borderline between the sectors. So fintech lies between the finance sector, which promoted, for instance, this project, and ICTS. And UNI, together with other trade union structures, has an intersectoral structure to promote dialogue and exchange of know-how. And as we're doing here today. And I'm here today as a representative of UNI, and I have to thank you for the invitation to this event. I'm the director of an intersectoral group, the professionals and the managers. And this group is mainly made up of representatives of workers coming from the finance sector and from ICT.
Would you like to go next, Paolo?
Which language to speak? I can do both, perhaps, but I will start with the English. Indeed, the definition of fintech is difficult. Clearly, it has a component of finance, a component of tech, but I do believe that this is common to many platform industries. So I'm not completely sure that fintech should be treated. Maybe I'm going to say something anomalous, but I'm not completely sure that fintech should exist per se. But perhaps it may be recollocated under the broad area of the financial industry in a similar fashion as other sectors that are being disrupted. So what is indeed new about fintech is the fact that the technologies are changing the business model. That is my definition. Technologies exist in the banking and finance sector since a long time, but AI in particular is disrupting because it's changing the business model. That is the novelty. But I'm not sure whether a specific category is of interest. So I think that also for the purposes of collective bargaining and union, which of course I've heard from the report and from the session this morning, I think that to reallocate the fintech within the category of banking and finance may indeed be a good idea. Scusate se non ho parlato, faccio un pezzettino in italiano, se si può, così facciamo un po' di switch.
Yes, let's switch to Italian for a bit. Yeah, he was right.
Mi introduco. Sì, ecco, esatto.
I'm very pleased to be here with you today. Thank you for the invitation. I was coordinator of a European project, Fintech, a Fintech project which started in 2019. It was made up of 24 partners, and its main objective was to foster dialogue, like we're doing today. But there was a dialogue between regulators, fintechs, and banks. So I'm very pleased to be here today and also to bring also the outcomes of that project. Thank you.
Would you like to give your views?
Maybe I just want to like add a small thing, and like I would say my definition definitely varies depending from the perspective. Like looking from a like regulatory perspective, it's a different definition than working from a workers' perspective. Because from my experience, like as a person working directly with workers, organizing workers for a trade union, they don't even call themselves like fintech workers. They've called them tech workers. They don't really care if they're like working on a dating app or like on the app of a bank. They just don't care. For them, it's the same work, and they just stop the work in the bank or in the fintech and just switch and go to one of the big trade platforms or go to a dating app or whatever. So they don't really care about the backing and the background of the company pretty often. And that's an interesting thing to see. So like all the things we discussed for fintech and we heard here today apply to many tech companies as well, to many even commercial companies, to trade companies. So like it's nothing special for fintech. The only special thing I would say is like the regulatory aspect, and also like in some cases my least favorite role as someone in a trade union is like putting the foot on the brake and saying, okay, you're like handling the money of people that they definitely need, and you cannot act as a startup anymore with like customers and handling the money of thousands or millions of customers. So that's another aspect that I don't have in other possibilities or in other trade union sectors like trade. So like if the website of a web shop does not work, it's not a problem. It's a problem for the company, but not for the customers. It's something else for the bank not working, and like the customer care of a bank not being available, for example, during the weekend and stuff like this.
Thank you very much. And Simon?
Yeah, thank you. And thank you for inviting me as well. I come from Copenhagen Fintech. It's a small organization working to grow innovation within financial services. We work with tech startups, but also a lot with, you could say, incumbent financial institutions and larger IT companies. For us, fintech is we define it as tech-based innovation within financial services, and that's, you can say, there's nothing new in that. You can produce that in a bank or in insurance companies, but you could also do it. And I think that's a new part that it is increasingly being done by tech startups and SMEs coming from outside the traditional financial services industry. And for us in Denmark, we work, when we say fintech and Copenhagen Fintech, we also cover what others would say in London. I think they do a division between insurtech, fintech, wealth tech, pension tech. We cover a little bit of everything in Denmark when we say fintech, but it varies a bit from country to country.
Thank you very much for your comments. I will move on to the next question is, what are your reflections on the recommendations that were listed in the reports that were prepared for today, as well as what are your reflections on what was being mentioned in the debate or discussion of the previous panel we had just before? So you can start from one end.
Innanzitutto, io penso che questo
First of all, I think that this is a very high level project, and the results need to be disseminated much, not only here today, but at a much wider scale. So I don't believe that this is the closing day of a project. This should be the bridge towards other sort of research as well. Because this research was carried out in a very limited geographical scope. And we're talking also about very peculiar countries. In other countries, there are many differences. And as UNI was discussing about the head of a department of UNI Global, and we were discussing about a possible future of this to get a wider picture of the situation. As to the recommendations, I fully agree with the listed recommendations. There are blurred lines and general recommendations for the social partners. And we as UNI already started to work on this. I'm talking about the general topics and the general issues of new technologies. And there's also an overlapping of the results of this project with other debates which was carried out in the finance sector. I'm talking about the conference of UNI-APRO of the Asian region of last year, because there was a special focus on fintech. Probably we need a stronger trade union. We need to maximize the organizing experience which was done in these countries. That was really incredible what was done there. But we need a trade union, which is not only a watchdog. It needs to become a partner within a very structured dialogue. So collective bargaining is key also on tech topics. We talked about algorithmic management, for instance. As UNI 2 years ago, for instance, we published some guidelines on algorithmic management. And we are updating these guidelines because we want to have also useful tools for collective bargainings. And there are also the new digital rights. There's the watchdogs, there's a privacy issue. Because in Europe, we have now new regulations on these topics, and collective bargaining can provide further supportive tools. And when we talk about new technologies, it's like I would like to take a picture of a runner, but a sprinter. How can I take a picture of a sprinter? So at the beginning, the picture is going to be blurred. But when a legislator comes in, when we have regulations, national regulations or EU regulations, the time issue becomes fundamental because the technology can't wait. It will move forward. It will sprint forward. So we need information and consultation and collective bargaining on different topics like ethics. I don't want to say obvious things, of course, but sometimes it is a mention of ethics like it was a la carte menu, as we could pick and choose what we want as a company or as a country as well. Because we also read what happen in a different hearing at national level on the regulations on AI, and they all call for a unique regulation, a EU-wide regulation, but then every country goes its own way. So we should make up our minds. What do we want? As social partners, we should have probably not our idea of ethics, because that would be like giving again, picking up our own definition, but having some orientations. And the same applies for the other topics. again, if I had to choose a metaphor when we talk about AI, we describe it as it was a sort of a car, and we define its performances, but we don't focus on the fuels of the car. So if we have to use the data, how to use it, and if those data are fit for the engine of that car, or if that can create biased decisions. I think this all goes together with the debate on fintech. And then we have the topic of algorithmic management. We might discuss this later on. Thank you. Yeah, and we can continue in Italian, so you don't have to take off your headsets. Thank you, Massimo. I would like also to go back to a question which was done earlier on the role of education. The associations, the trade unions, the hubs, what was called the ecosystem, the ecology, has a very important role for the education. What do the fintech need to grow, to scale up and become competitive? Of course, they need an environment, they need legitimacy, but first and foremost, they need skills, competencies, they need training. This is a competitive factor for a fintech. Maybe it is, but it is a competitive advantage today, but not in a year's time. And this also especially applies for AI and all that goes with it, machine learning, the data analysis. I'm lucky enough to have a background in statistics, and I know that these words mean exactly the same thing. That what is to analyze it in a smart way, a big amount of data, and this is all crucial for the future of Europe. We ambitiously set ourselves the target to regulate AI with the recent Artificial Intelligence Act, and other continents had different strategies. We set ourselves a very ambitious target. So AI has to be at the service of users, of workers, of citizens, and of employers. But to do so, we need to understand what trustworthy AI means. As Massimo was saying, we cannot have a la carte approach. We cannot have just empty words. We need to have operational rules, something which can then translate into practice. And we notice that it's very difficult to have in different European countries to have the idea that a trustworthy AI can also be measured, not only defined. But to measure means to learn, it means to have the right education, which also needs to be financial know-how, means to understand what robustness means, robustness, explainability, sustainability, all different categories of AI. But we need to have not only abstract concepts, we need to understand what that means in practice. And this means that you need to put together the tech know-hows and the finance know-hows. And also you need some knowledge of mathematics and statistics as well. So but to do all this, it is absolutely not easy. This was proven also during the EU project we carried out. We need to do so also to build some hubs, as you were rightly saying beforehand, places where people can meet. You were saying for Copenhagen, the different operators need to meet, and also the regulators need to be there. Because in big countries, we have a twin peak models. So we have 2 or more authorities, and it's difficult to understand how contamination can be important. So we need contamination between different competences. Also, the academic world needs to be disrupted, because now it's made up in silos, because we have many silos in sciences. If you're a statistician, you're not a sociologist. So we need to break down those barriers and work together on concrete examples. So the best way is to work together in a hub. And there you can do real things with real partners and real actors. So you need to get out of the box and get out of your own silos. That's it.
Thank you very much. There you also touched upon some of the challenges facing the sector. I'd like to hear, do you have some points you would like to raise on the issue?
Definitely. I think the last point of working together is really, really important. But I would, from a trade union perspective, I would add one thing, because I think you can only be like a partner in this dialogue as a trade union if you have the industrial muscle to do so. So like without union density and without union members in the sector, you cannot be a partner which is like actor in this field. So like you cannot be sitting at a table and just sitting there without any background and any membership represented by you at this table. So that's something we could not, or we should not forget as unions. Of course, we have like the experience and we know a lot about banking, we know a lot about the sectors, but as long as we are not able to do stuff for our members and to be able to win fights that they will be there, then we don't need to go there from my perspective. That's one important thing. And a small thing I would like to add is, like, we're talking about good jobs in tech and fintech, but when a company reaches a certain size, there will not be only good jobs there. There will be people with like limited term contract in customer care. There will be outsourcing to other countries with like less good working conditions and stuff like this. So like this is also something happening in tech and fintech. We often forget this workers when we talk about tech jobs. We are thinking about like all the engineers and developers and so on, but we forget all the people depending on them basically, and we should not forget them. That's one thing. And especially like from like a Berlin perspective, I would say tick all the things mentioned, but mostly doubled or tripled. So like we have in Berlin and fintechs, we have 50 to 80% foreign workers. So nobody knowing about legislation or language. So like you can live in Berlin like 10 years without knowing any single German word. So that's not a problem at all. And we see this at companies. We know that companies use this in their favor. So like they give people contracts that are not legal in Germany, but people don't know. People don't know about unions. People don't know about works councils in Germany. And all the stuff is used by companies. So, and that's something we also need, where we need to work together internationally to get something done and like to have an influence on the companies. And not only, for example, if you have a big office of a fintech in Berlin, you also need to talk to the people in Sweden, for example, where the fintech originates and stuff like this. And that's something we don't do enough, in my opinion. That's something we need to do more often and more intense, definitely.
Yeah, thank you very much for your input.
Yeah. Now, I don't think it's an easy task at all to combine these two things here, the traditional unions and the tech startups. I wouldn't say, looking at these recommendations, I don't disagree with them, but I also think they definitely will not kind of solve this issue. And I think for some instance, I would like them to be a little bit more concrete in terms of, especially in terms of the kind of upskilling, the training thing. I don't think we definitely need more analysis or on this. I think I could rather quickly say what is it we need here, and then I think it's much of a volume game. So I would recommend a little bit more action, a little less reports on that sense, and I think that can be done. In terms of union strategy, I would probably say I would probably divide the group of fintech companies not in the traditional finance sector in two, saying for the kind of the smaller companies, the one living on investments below what I would call Series A. So these companies I would definitely not focus on in terms of unionizing them. I would focus on how can we help them grow, and maybe also how can we get some of the workforce now employed in the traditional part of the financial sector retrained to take some positions in these companies. So when they become bigger, there will be people in there who knows how the benefits of being in the union. But I would definitely say the smaller companies, help them grow, help them create the jobs, and then I will take them at a later stage when they're larger. And it's still a hard job, I think, to organize tech companies, even when they're bigger, but I wouldn't focus that much on the smaller ones.
Thank you very much. You've mentioned a lot of the challenges associated with the fintech in terms of organizing, in terms of the silo thinking, the different EU regulations that's on the way or in the pipeline. Some of it is adopted, others is just on the brink. So to have a little positive note on this is, what opportunities do you see arising from this emerging sector, or new ways of organizing work and services?
L'opportunità è quella di...
The opportunity that we have here is being able to harness the potential that this sector offers and exploit it right here, right now. We should also go for a so-called breakthrough action, that is implementing change which brings about a drastic, terrific innovation. So a breakthrough action, as I was saying. Much as can be said about all bordering sectors, or sectors which tend to be on the fringe, I wouldn't want to go back on threats, talking about threats. Rather, I'd rather talk about challenges that needs to be faced. Collective bargaining can be used as a lever to achieve this drastic change. It would also allow us to do this quite quickly, quite effectively, so as to avoid other actors coming into the field. That being said, we need to put checks and balances in place. And this is why I would actually be interested to have a broader analysis. What is the level of bargaining in this sector, for instance? This is a question I've asked myself. Moving beyond the single contracts that employees have, purely based on what has been found out in the report, the situation is fairly diversified. There are companies that are larger, some are smaller. The number of employees varies drastically from company to company. Some have around 250 employees, some have fewer, some have more. Fintech also brings about a great opportunity, which is a challenge in itself, and that is managing these processes from a mathematical standpoint. This is something quite embedded in fintech itself. Collective bargaining, therefore, could be the tool that allows us to go beyond the lack of clarity that we have in this field. This lack of clarity takes various shapes and sizes. It is partly due to the legal framework, and that has to do with privacy, the privacy that employees are subjected to, intellectual property rights, some of which are also quite technical in nature. Managing this from an algorithm point of view creates power symmetries, and these could be balanced thanks to collective bargaining, because this would kickstart a social dialogue. And I will use a term which I know I can use in this context: relationship that are on a level playing field. This doesn't necessarily happen with other big players that we've mentioned. One day in the future, they may try to come into this sector, quite forcefully so. Think about Amazon, for instance. What could Amazon do in a sector such as fintech? What are the potential damage, which is the potential damage that it can wreak? What kind of social dialogue could we expect from Amazon? Spoiler alert here. I am very familiar with Amazon because of my job as a trade unionist, first on at a national and lately on an international level. And Amazon is not quite competitive. It does not meet the criteria that you've outlined for stakeholders. That is to say, you need to be competitive, but interact in a way so as to reach the desired results. Amazon is everything but this. And I am acutely aware of this as a trade unionist, but also as a citizen. And to be honest, Amazon scares me a little bit. That's why I'm rooting for the model that was outlined this morning. Amazon is just one of many stakeholders that bring about a deregulation of the market, destroys barriers and boundaries. This could be the next step, that these big players end up taking hold on this very specific sector. I don't want to be all about doom and gloom, but I think we should also be fairly objective so as to understand what we must do as trade unions. We should also consider, therefore, companies that want to kickstart a true social dialogue, as was said earlier today.
I think that this time I switched to the English because I wouldn't know how to express effectively the concept here. Is that I believe that there are many opportunities with the fintechs, especially in Europe, particularly because, as Massimo was saying, the real value is the value of the people. And the European financial sector needs talented people that look forward and that are involved with the technological developments. We know that there are sectors of the financial industry in which we are leaders, like the insurance sector, for example. There are other sectors in which we are not leaders. I think that fintech can offer the opportunity for the European ecosystem to engage well with others and face the challenges that are brought by the big techs, which are clearly typically not European, as we know, and that do disrupt not only the business model, but also industrial relations, as we well know. So here is one opportunity that we can catch. The other opportunity is the opportunity for the citizens, because one thing is a financial product that is anonymous an AI application that we don't know what's about. We just take it for granted. It tells us, for example, that the probability that tomorrow we have a heart attack. Well, let's change the topic. Tomorrow it rains is very high, but we don't know why. No? So we want to know why. Why the credit scoring of that person is very low. Why? It's not sufficient that it tells me that the probability of credit of default is 95%. I want to know why. So if I know why, maybe I tell the company, look, you have to reduce your leverage, you have to increase equity or something like that. No? And this is what we need to grow, especially as in Europe, we have many small and medium enterprises that do need education. A third opportunity is the opportunity of fairness. No? Fairness and non-discrimination belong to the European culture. And if we rely on AI technologies without thinking about what we're doing, we risk, going into discrimination policies, which do exist also for humans, not just for AI. Often humans, are clearly black box because you don't know. I don't know what you are thinking clearly, because it's in your mind. That is good, but when it comes to decisions, this black box also have consequences. No? So thanks to the developments of AI, we are also able to measure this opacity and to look for fairness. So we have opportunities that are brought by technologies. To realize all these opportunities, the main challenge I see is the ecosystem, which needs to be European, because single countries, even the larger ones, do not have the scale to compete at the worldwide level. This, I think, is the main challenge.
Yeah, would you have some views on the opportunities rather than the gloom and doom on the fintech sector of the challenges that's been raised? With some of the positive notes.
Definitely. I think we as trade unions can learn a lot from people working in the sector. As we heard, like it's young people, highly educated people, people from like a variety of backgrounds. So like we can learn a lot from them. So if you're looking like in the classical trade union people, that's mostly not very, they're mostly not very young. They're mostly not very diverse from their background. It's like, and that's like something where we can learn a lot from them. I think we can learn a lot of ways of working. So like we can like just steal the good ideas and the good ways of working, which might not be algorithmic management in any case, in every case, but in general, of course, we can like steal good ideas from the companies for our work. And of course, like doing stuff together with different actors can also definitely be a huge opportunity, as long as I said before, you're on the level playing field, on the same level, and you have the power to do stuff that you want to do, and you're not like a passenger in the car, just to take up this Massimo's picture of the car. So like not be only be a passenger, but also have the chance to get to the driver's seat at certain points.
And Simon, do you have a note?
Yeah, sure. I think there's super many opportunities. I think in the last 5 or 6 years, I've been working closely with more than 250 fintech companies from the non-traditional finance sector. And I think, I'm amazed every day on the creativity, the motivation, the desire to solve real financial issues for people and companies that were not served early on. So I think most of the companies I meet, they are in this and doing this because they see unmet needs from either old people, people in the third world, small companies, stakeholders that had problems that was not solved by the traditional financial sector, if you ask me. So I think there's a huge creativity. The companies are very much focusing on diversity, innovation, increasingly also on people. I see more and more fintech companies saying people first and saying this, we need to focus on people before anything else. Before investments, let's just make sure that we have someone in our team that can make sure that we get the right and the most motivated people in our team. So there's a lot, I think, that is that talks into the core value of a good working place. There's also, of course, challenges, but I think there's a lot of opportunities. I agree in the challenges of the potential threats of larger companies from both East and West, I think. And I also think probably the biggest opportunity that we see in the fintech space is also that if we can get this collaboration up and working between the rising startup scene in Europe and the established financial industry, then I think we can also help that the traditional financial industry does not become irrelevant, because they haven't been solving these issues. I think Amazon and some of the Chinese players are solving these issues, but I can also see that. So we also need to make sure that the companies where you have good agreements, that they don't become irrelevant over time. And I think fintech is the key to solving that issue. So many opportunities.
Yeah, thank you. And I think we will open up for a few questions from the floor, if there are anyone that would like to chip in with a comment or two. Yeah, Bertil.
I was a bit curious. Do you hear me? Yeah. Yes. Indeed, you do. I was a bit curious, but you, Oliver, was it, pointing out that we will have a lot of crappy work as well being done in this development that we see in front of ourselves. Do you have any ideas about what these jobs could be? Who are they? Who are the ones who will do the bad jobs? And what type of jobs will they do?
I would say they're doing like the same jobs as in like more like old school companies. They do like all the customer care stuff. They do like all the non-technical jobs mostly. They're definitely not better in like modern fintech companies. The non-tech jobs are definitely not better than jobs in not so modern companies. And it's like, yeah, I would say like just everything that's not tech. They're like in fintech, there are like, of course, some non-tech jobs that are not crappy jobs, like all the regulatory jobs, like the classical banking jobs in fintech. But everything else, like, yeah, customer care, especially like customer care, marketing, all these social media stuff. And that's like not well paid, high workload, basically no chance of any career development. Yeah, limited term contracts, short-term contracts, all this stuff. And that's the bad aspect of like globalization. That's these jobs are pretty much changeable by location on a fingertip. So like they can easily go and give these jobs to other countries and other regions of the world. Not much. Not like, of course, like they also like in there is still like kind of challenge is like who is the cheapest, definitely also in tech, but the level is definitely another one than like in non-tech jobs. So even like the crappy tech jobs are not crappy jobs compared to non-tech jobs, I would say.
I've been looking into another.
It works.
Does it?
Yeah,
oh.
We hear you.
Okay. I've been looking into another domain, medicine, and the use of, and you've been talking about algorithmic management and big data as well. And sort of the impression that it's not about big data, it's about a big amount of different types of data sources that is supposed to be combined. And they keep on talking about the rubbish work they have to do when they're supposed to laundry all these data in order to make it comparable. And you can see all these repetitive rather sort of boring work tasks emerging as we increase complexity in the digital infrastructure as well somehow. But I mean, this is obviously a matter of speculation, but you can see, I was at least a bit stunned by the way they were talking about boring tech jobs or boring tech tasks within that field. Could you see anything like this in the fintech domain as well?
If I may, sorry, if I may, being a kind of tech myself, indeed, I was about to say that that is a clear distinction between when you do machine learning or in big data analytics or whatever you want to call it, there are really different types of jobs. One thing, as you mentioned, is the data integration, data collection, also data maintenance, that do require certain skills, and sometimes they are a bit repetitive because they rely on things that do exist. Another thing is to model, to build the model. That is maybe 10% or even 5% of the activity, and that is where the creativity goes. It's much more, let's say, satisfactory. And there is also programming, that nowadays is typically done through the internet. It's not the programming of 20 years ago. You have basically have to put together different pieces from different platforms. So you are very right. There's a clear distinction between different types of jobs. What differ among them is the, let's say, the kind of creativity and ownership that one puts into the job. It's like in the old world of alienation in a way. You, for certain type of these jobs, you really feel that you are part of the chain. I mean, you're not putting your own values. That I think it is very important, especially when we are in the platform jobs, and especially of those based on AI, whether it's medicine or finance or automotive, it's pretty much the same.
I think this is an issue or an element you see in all types of industries where you have technology. I think one of the shocking thing Anna and I saw when we were doing both, we have done within the fintech sector, but also more in other types of digital companies, is when they talk about they're using AI and these high-tech technologies, we get a bit shocked because we had some slightly different expectation that the technology was at a certain level, rather than you having to enter from an Excel sheet and then you put it online and you call it that we have gone digital. Yeah. So, yes. And you're thinking, how creative is that process of the job? Yes. And that gives some reflection on that it's not just rose bushes and pebbles all around, but there are also things that are a little bit more less interesting. Wouldn't go so far as saying crappy jobs, but less interesting jobs. On this note, I know we are supposed to round up a little bit, but I think I will take up what Morten was saying, did in the last session. So if you have very briefly one-liner takeaway to the audience about what you think would be something memorable for them to take away from today. Do you want to start this time? We start this way.
I can do that.
Yeah.
No, I think I would focus more on the solving financial issues thing than say that we are actually in a sector now solving more issues, doing better financial services than before. And I think if we keep focusing on that, I think we should focus on that.
Yeah.
Really hard task to round up this discussion, I would say. But as a trade unionist, I would say what I most like to say is like collectively we're definitely stronger than individually, and like we need to organize, and that's something we should do not only in fintech but in tech in general. And without this, we will not be able to create the future of work we want to have in the end, and even maybe not the society we want to live in.
Yeah.
I should say, going back to the previous comment, solving financial problems, so put the fintech within the financial sector, but solve them in an explainable way, in a safe way, using maybe AI technologies, but safe ones, explainable, fair, and so on.
Yeah.
Voglio solo chiudere con una frase di...
I'd like to wind up with just a sentence. I'd like to just wind up with a quote from a French poet and writer, Paul Valéry, from the last century. He said that a man by himself is always bad company. I hope that this is not the end, but a starting point for reflection and tangible measures, as the professor was saying, together, because you're always in bad company if you're on your own. Thank you very much for inviting us.
Thank you very much for all your inputs and thank you for listening in. And now I think there's lunch, but I don't know exactly where it is, so I'll leave that to Morten.
Yes,
take.
indeed.
Thank you.
Much. Thank you very much, Trine, and thank you very much to all of you. So indeed, we have lunch now. The lunch will be served downstairs in the same restaurant where you had your breakfast this morning. There are some tables set aside for us. So yeah, you can just head down there and then we will make sure to get you fed. And then please, of course, be back at 1:30 for the continuation of the meeting. Thank you.
So we will start the third panel of the day. My name is Simon Jernberg, and I work as a policy advisor at Nordic Financial Unions. And I will moderate this talk about skills and talents, how to develop them, and how to retain them. And as we know, the digital transformation presents enormous opportunities for the economy and provides scope for productivity and economic growth, as well as improvement of working conditions and wages. But at the same time, like any other transition, we can see there are some challenges. Digitalization is bringing that we need to address to really get the full benefits out of this transition. And a particular challenge here is that the labor force need new skills and digital skills to keep up with the digital economy. And we can also see in the EU that this is very evident. Recent numbers say that there is, among EU citizens, there is 40% that lack basic digital skills. And also, if we look at the finance sector, this is a big issue. And we can see that the digital development is really, we can see that finance sector is in the forefront, driving the digital development. And we can see that fintechs are important in this development as well. But also here we see that there is a lack of digital skills and competition for talent. And that's what we're going to discuss here in this panel today. We have a really nice range of expertise from academia, trade unions, fintech companies, and traditional finance companies. So I would think it was really nice if you would like to present yourself a little bit, your name, your organization, your role, and also your connection to the topic of digital skills and talents. So please.
Hello, everybody. I'm Renata Włoch, and I come from Digital Economy Lab at Warsaw University. I'm a sociologist, so expect many "it depends" answers from me. But I work for like 10 years now with economists, so I'm a little tainted with economical point of view. And like for 3 years, I've been researching finance and tech sectors in Poland and Central Europe. And I have a lot of results from this research and will try to speak about them today a bit.
Yes. Welcome. Thank you.
Thank you. My name is Diederik Bruggink. I'm representing the European Savings and Retail Banking Group, also known as EFG, which is a Brussels-based trade association of savings and retail banks. We defend their interest, notably vis-a-vis the regulators. We present them in all kinds of platforms. Within that association, I'm the head of innovation and payments. Payments being basically my core, I would say, competence, being trained as a mechanical engineer. I ended up in the payments business, which shows that at least for skills within banking, you can go in all kinds of directions. But the link to here is typically also in the digitalization and the innovation part. Looking at it again, representing banks, and on the end looking at payments, which is basically a value chain, a multi-stakeholder environment. We deal a lot in those in all kind of multi-stakeholder groups in which fintechs are also present. So and also a lot of legislation that affects banks also affects fintechs. So we speak with them a lot. So I will leave it here.
Yeah, great. No, my name is Maurice. I'm CEO of online payment platform. Online payment platform is a fintech. I'm being CEO for over 10 years now, and we focused on payment services for platforms and marketplaces. So all these places online where you have multiple sellers connecting to multiple buyers, and we do that for all over Europe for large companies like eBay Kleinanzeigen in Germany, Marktplaats in the Netherlands, but also a lot of smaller platforms like Pet B&B, where you can bring your dog for around the block from your neighbor, or like a nature house where you can rent a house that is somewhere in the woods or something, and we take care of all the payments for that. And apart from that, I'm also chairman of the United Dutch Payment Institutions, so also talking a lot to the regulator about regulations that we see and upcoming challenges. So that perspective will be represented by me for today.
Great. Thank you. And Arne?
Hi, my name is Arne. I'm from the FSU Norway, not a member of the EU, but we're still or close to Europe at least. But I'm the vice president of the union in Norway. It's the largest union in the sector, with approximately 65% of the employees are members in my house. We have done kind of similar projects that you've done now, the FinTech and the trade unions. We started that in 2020, 2021 with one report. And the reason why we wanted to do this report is to understand the new market, to understand how it works, how the competition works, and how they collaborate in between the traditional banks and insurance companies as well. And I believe that you all said earlier on the panel that that the FinTech companies, they are like very interested in the people. But I agree with that, but also the traditional banks and insurance companies, they're also interested in both people, planet, and profit. And in that context, so profit is last and the people are first. So what has happened during the first report that we did is that we have actually managed to sort of penetrate the FinTech and get more information and more talks with them. And hopefully in the future, we will do even more reports. And I'm going to refer to a new report that we are going out with now at the end of May, which looks a bit similar to what you all have done on this big EU report. Thank you.
Thank you. And last but not least, Petru. Yes.
Hello. Hello. My name is Petru Dandea. I'm a trade unionist coming from Romania. I'm the General Secretary of one Romanian Trade Union Confederation. And in the last 15 years, I used to work also inside the European Economic and Social Committee. Inside the committee, I started on the topics that I used to work in Romania in the trade union world, as to say, social security, taxation, but later on I moved towards the financial sector. And in the last 5 years, I've been the rapporteur in the committee on important initiatives of the European Commission. Last year was the last opinion on things related to digitalization, the digital finance strategy presented by the European Commission. Inside the committee, we are dealing with opinions. In fact, we as an institution, as European institution, are the voice of the civil society, showing to the policymakers what we are believing in relationship with the public policies they are promoted. Tomorrow, I will be in Brussels dealing with a new opinion that is ongoing inside the committee. It is the digital euro. It's an interesting, innovative project of the European Commission. Of course, I know we are living in a very difficult period, very complex, multiple crises on which we are passing through. But Europe is a big dinosaur which is moving forward slowly, but it's moving. So that is good. Okay,
great.
Thank you.
Thank you. Now you really got to learn and meet our panel here. Going back to you, Renata, first. As you said, you've been researching a lot on digitalization and how it is affecting our economy and the time we're living in. And you're referring to something you call that we are living in the digital economy. Could you, I mean, connecting to that, we were talking about the ecosystem that fintechs act in. Could you tell us a little bit how you define the period we live in now? What is the things that have defined the time, and why is it digital now and not as 60 years ago, as we heard in the first presentation? Or are we still in the same time?
This is a very good question. And my question is, how much time do we have? Because I can speak about it for hours, really, but I will be up to the point because I'm standing and I tire easily. So digital economy does not exist. We have many streams of dispersed digitalization, and we have some sectors in which digital transformation is occurring very fast. And financial sector is one of them, because it was already based on data, it was already datafied. So now when we speak about some of the aspects of digital economy, when we want to differentiate it from, for example, internet economy, we speak about datafication, which is enabled by such technologies as cloud, different types of AI, and so on and so on. And we have platformization. And both of these processes are taking place in financial sector. The other thing I want to say is that when I was starting the research of the financial sector, I was very open-minded. I said to myself, no stereotypes, don't think about the Wolf of Wall Street, don't think about this film at all, just go into this sector, go into this environment and try to analyze what is happening there. And I met bunches of lovely people, but almost all of these people had quite a Darwinian point of reference. And they said, we have, digitalization, we have digital transformation. There are scopes of our employees that we will have to let go. And then we will just source the market and take people with right digital skills from the market. When I told them about the scarcity of digital skills, that we have very few people all around Europe who have very high digital skills, like programming, like trying to, revolutionize the sector, they just did not believe me. And now they are coping with the fact that they are letting people go and they do not have people to employ. But the last thing, because we have a lot of people in this panel, and I will be concise, I would like to refer to what Professor Rolandsson said at the beginning of our meeting, that we are talking about this digitalization and digital economy and digital transformation for such a long time. And what I saw when I did my research was that this is very often used as a kind of ideological concept, a kind of discourse. We have to let you go. We have to do these cuts in our stuff because there are digital needs, because we have to reorganize the company, which is not often the case. The cases are structural, and we have to have this in mind and not put everything to digitalization and digital transformation.
Great, thank you for that start of the discussion. So, Mr. Brugik, representing savings banks and retail banks, which we can call smaller banks here. How do you do to, compete with bigger banks and big tech and fintech in getting talent and skills to
thanks for the question. And first of all, just to avoid misconceptions, savings banks are not by default smaller banks, I would argue. By the way, we represent the savings and the retail banks, and even some of our members are, in fact, the dominant player on the market. So maybe it's better to look at how do these differ from the other banks you mentioned. And if you look at our membership, again, European Savings and Retail Banking Group, our members share the so-called what we call the 3 Rs. They have a regional approach, they have a responsible approach, and they focus on retail customers, be they consumers or SMEs. And I think with that, that's a bit of their DNA. They differ from, let's say, the bigger commercial banks or the other banks you have out there who might focus on other segments or might have different values. And I think these type of values might already be a key differentiator for staff to choose in their career, going to join for a savings bank or go for a bigger commercial bank. And we see, of course, these patterns changing over time. Also because mindset of people differ. When I was young, and maybe most of the people here in the room, I don't know, want to become an investment banker when they were becoming more adultery, because that's where the future was, that's where the big money was made. But now, especially in investment banking, it's very hard to find people who want to work 16 hours a day for, of course, good money, but the compromise is at the lifestyle end. So I think from our association perspective, I think we differ from in terms of our values that we share. But again, between banks in itself, I think it's for consumers, people, staff that want to join the banking industry, they have made up the mind they want to join a bank. And I think for them, it doesn't matter that much what type of bank they're in. As mentioned before, most banks are still divided into silos, which of course means a lot of fragmentation. But what comes along with that is that also career opportunities. If you want to move from one silo to another, it's easy to do so. If you want to focus on mortgages at the start of career, and after that want to get into brokerage or whatever, the career path is there. Whilst on the end, if you look at, for example, the fintech industry, usually what we see, they have a very narrow proposition, and I don't mean that as an offense, but they just do, let's say, cherry picking. They choose one thing they are pretty good at, maybe better than banks, but they only do that, which means that they only focus on one product, on one proposition. Whilst in the bank, you have to still fulfill the full needs of a consumer and come up with a very broad proposition. Which means in banks, you can move from one area to another, while in fintech, it's a bit narrow. This, of course, with fintechs, especially when they are a bit younger, I would say, it's good for having developers and people who are good in user experiences and client journeys and whatever the buzzwords are. But if we see this fintechs maturing, they start really looking like real banks, or at least financial institutions, and with that. Of course, comes privileges, which is great, but also obligations, which means that at some point in time, also fintechs will probably have more staff in compliance than they have front-end developers, which is, I think, part of the nature. But I'll leave it here. Also, giving the other people some time to share their views.
Great, but it's a good segue over to you, Maurice. I mean, we've heard here today, and we also read in the report that, I mean, a lot of fintechs say that they have a trouble getting talents and getting skilled employees. Do you agree with that picture, and do you have any strategies to tackle that potential problem?
Yeah, I think in general there's scarcity on talent all over the whole tech industry, whether it's financial or anything else in general, and especially while every other sector is also moving into digitalization and needs more skilled people. So we all see that there is going to be scarcity about this kind of skills all over Europe for the next years to come. So first of all, that's on the tech skills, and then you already mentioned it. There's also compliance skills, which does relate a little bit more to the financial sector. It's not exclusive to them, but still a little bit more on them, and that's also where we might even see more issues directly, because they are need to be more specifically trained to handle the specific risk analysis that you have as a fintech company, which is different than for a bank, and it's different for an insurance company. So also, and that means we have to find those people, but also train them yourself. So we have training solutions, especially for compliance departure. We develop training solutions specifically for payment service providers that you be able to, from your start on, learn to handle compliance issues that are specifically catered to the payment service providers. And that, I think over the last 3 years, we developed this educational program together with the University of Amsterdam. And now we're already seeing the first results of people moving into this specific compliance department that we can actually directly use in the team, instead of we have to do the whole education ourselves. Secondly, we have also in our company, we have quite a large customer care department. And that's a very good basis for people to start and learn about the company and then grow into the roles that we have further into the company. So although it's not as siloed as a bank, we do have different roles within the company, and people start in our customer care department at very young age, but develop into more internal learning, into even compliance and tech as well. And further that, the strategy to find them is still very good looking and informing them that you are out there. And we attract a lot of people from other larger fintech companies. When they grow too large and they get to the size of the bank, it's usually the culture that's changed rapidly. And by the changing culture, they lose a couple of people that don't like this change. And they move downwards to companies mid-size or even small companies because they like the growth stage of the companies.
Yeah, thank you. Anne, you mentioned your report you did in Norway. What would you say is the trends in fintech in Norway connected to skills and talents? Do you also agree that there is a lack of?
Wow.
Of it?
Well, it's totally different from anyone else. No, but no, we have done 2 reports now. The second one is coming out now at the end of the May. And what we learned from the last report that are coming out now is that it's a fast-growing business. It's increasing by above 40% since last year, so it's quite fast-growing. The second thing that is in this report is that more than 40% of the companies that are established has been established the last 4 years. So they're kind of young companies. And the one that succeeds the most are like payment services and dealing with security and compliance. And there's very, very few companies that actually earn money. And it's very, very few companies that actually go abroad Norway. But what is interesting is that from the last year's report is that a lot of the companies that we have spoken to are increasing their profits, but also the companies that had big losses have less losses now than they had before. So that is quite interesting. And we do also have the problem with talent and the lack of knowledge. And I think that you spoke about laying off people because you need to turn around and everything. But I think that's the old way of managing a company. The new way of managing a company is to develop the employees so that they can be in or on the train that's going forward, because we all have a responsibility or a common interest to address the lack of skill and the mismatch between the needs and everything. So that's a big problem. And also this is kind of part of the green transition, you know, the upskilling and reskilling of the employees, to just give them jobs that are good and also give the employers employees that are good. So that's a common interest, I believe. And I think that also the Nordic or the Norwegian model or the Nordic model in this room has worked well during many times in history, where business has developed or the country has developed. This has been a good way to find actually the good work balance life, sort of, and it has been helped by the pandemic as well. Since then you can take care of some kids while you also can do some job at home. And you told me that you're going to stay here until tomorrow because now you do vacation and working at the same time, so that you don't have the flies shame, did you call it? So you don't have to travel that much. So that's kind of interesting. And I think you were also talking about digital skills, but I also think that's not enough. I think you need also to have like domain knowledge actually to move forward. Digital skills, what it is. I can turn on a computer or what. So we have the same problems as the rest of Europe. We need the people, and everybody wants them, and they earn too much money, and they drive the salaries up, and then it's a problem with and challenging the actually collective bargaining thing that we do in the Nordic model. So thank you.
Thank you. So moving on to you, Mr. Dandia. In your work in the Economic and Social Committee, you have in your role as a rapporteur also advocating for that fintech should be regulated as like same risk, same rules, same supervision. How do you, I mean, many fintechs, as we hear here, are very small and they're not doing profit. How do you see that they can balance being regulated but also attract talent and maybe make profit one day. Do you have any comment to that?
We had in Romania a startup. If you are going to Google, you will find it. They start the business, a fintech startup. They started the business 4 years ago. Last year, they closed the year with a turnover over 1 billion euro. So you can do this kind of stuff. But discussing about people, what I believe, or at least this can work very well in Romania. In Romania, the guys, what they have done, the banks preferred to develop their own digital machineries. They didn't rely on the fintech sector. They preferred to have it. You have a Romanian colleague here in this room, which is working for this type of department inside of a European systemic bank. You know, we have 8 systemic banks in Europe. So big banks supervised directly by the European Central Bank. My colleague is working in one department developing application for a bank like this in Romania. But what we are doing inside the committee, it's true, last year we worked on the strategy, on digital finance strategy proposed by the European Commission. And because the Commission says that they would like for the same activity, supposing the same risk, to have the same regulation for the classic part of financial sector, bank and insurance and fintech, we practically says we agree, but we would like to have the same supervision. Why? You know that after the financial crisis, Europe developed the big supervision system, including the 3 authorities, EBA, EIOPA, and the European Authority on Financial Markets. And we says that regulation for fintech have to be aligned with the regulation for the financial sector, because even in this fintech sector, we know that we have fintech companies specialized in providing tools and services to the banks or insurers, but there are fintech companies which are getting involved in the market, offering by themselves type of financial services to people. So that's why we are saying we support the idea of the Commission for the same activities, supposing same risk, having same regulation, but to include fintech under the supervisory mechanism of the European Union, because of course, we, as the voice of civil society, we are every time interested in the protection of consumers, because all of us finally are consumers.
Right, thank you. Coming back to you, Renata, based on these discussions we're having here and on your work, what would you say is the status of digital skills and digital competences in Europe, but also in the finance sector? As I say, what are the biggest challenges, do you think?
I would say this is a very good panel because it got me to deconstructing things again. And I would agree with you, Arna, that digital skills, this is an empty category, and each sector and each company can put whatever it needs from the point of its aim and its business goal. But right now we have the situation when the idea of digital skills is used politically. It is constructed by the European Union. We have, this digital economy and society index that measures digital skills across Europe. And we got, these rankings that this country is good at digital skills and this is not very good at digital skills. But what we need to think is not skills, because when you talk to both employees and employers, skills are easy. You can take a man or a woman and teach her or him digital skills in quite a short time if and only if this person has some basic capabilities, and these capabilities are quite wide. This is adaptability, flexibility, and it is digital literacy, that you know what you can do with those tools, those skills, and those technologies. And this is what we need much more to part with thinking about, skills understood very particularly, and to think about digital literacy. And when it comes to financial sector, we also need employers that will be willing to change and to change constantly, because this digital transformation will accelerate. It will not stop down, particularly in this sector.
Thank you. Thank you. So moving on, we've heard a lot here about the collaboration and the cooperation between banks and fintechs, and that there is a strategy among some banks that if you can't cooperate, then you might buy that fintech company to get the product or buy up like that. Is this a development you can see among savings banks and retail banks as well? And do you have a comment on this?
I think, generally speaking, at the end of the day, both banks and fintech try to serve the same people, which are mutual consumers, which also means that you both have an interest in to make sure that these consumers are served well and in the best way possible. It's also interesting to look at what is exactly the fintech. Is it there is of course clear the financial aspect. We see what that is. The technology aspect is also clear, and fintech is something that meets in the middle. Is it like a platypus, a kind of animal that we can't classify in one or the other, or is it like in terms of animals again the Portuguese man of war, which looks like a jellyfish, but in fact is a symbiosis of 3 different species that live together. But if you pull them apart, they will not survive. Which also comes then back to where exactly these entities meet in the middle, like Petru said. What types of activities are they engaging in? Is it indeed taking the same risks and then following the logic need to follow the same rules and what have you? Or is it something different? And we see also sometimes in fintechs that the boundary is not exactly clear, also not for the supervisors. It can lead to some excesses in some points, like, for example, the Wirecard case in Germany, which was clearly an example of unclarity about where the license activity started and where it stopped and the technology kicked in. But having said that, these entities need to work together, I think, again, to come out of the platypus or this Portuguese man of war, to serve the customers better. And that can be best done in mutual agreement. As I said before, banks are trying to offer a full service proposition to their consumers, meaning they are also kind of a trusted party for them where their data and the money is safely guarded. And fintechs usually try to take one niche which are probably better at than banks in some cases, and try to serve customers better there. But for in order to do that, they need to either use some of the data that is hosted by the banks, or they need access via the banks to clearing systems for payments or security settlements or what have you. I think that's best achieved in a mutual agreement that's beneficial to both parties. So you need to both be able to win for it, because if just one takes the advantages and the other only suffers the losses, it will never work well. And from that point of view, it should be also very fair how the game is being played. So also we heard here about making profits or being sustainable. And what we saw, especially in the past, where some fintechs were really trying to undercut bank prices by basically just burning shareholder money, because that was being thrown, I would say, at the fintechs by the millions, if not by the billions. And with that, it's of course easy to compete, and it's indeed also good that there are also some changes being developing, that the good ones survive, but the ones that are just need burning shareholder money that they fade out, because it's all that is also not very beneficial to the customers that we serve mutually together. But I'll leave it to you.
Yeah. I think you already answered the question I had on competence development earlier. I would very much like you to comment on the discussion here about the collaboration and the cooperation with traditional financial actors and how you go along that, and your view on this discussion.
Yeah, well, we also need access to the bank technology, and we are collaborating with multiple banks in our processes. So I think that's for sure an important part. and we work together. And I think when I started building this solution about 10 years ago, it was harder to get to convince the banks that we were not by default a competitor, but that we would be an additional product that we provide to a group of consumers, but also businesses that they wouldn't be able to provide the same services to. And that since it has become easier and easier. And I remember for we have a couple of, not that many banks in the Netherlands, and a couple of the large ones that in the beginning we had, with one of them, we would never be able to even to get a bank account with them because they didn't like the whole concept. They didn't trust us to be able to do a proper compliance job, or they didn't want to basically serve us as a fintech company by providing the access to the infrastructure. But other banks did, and we now have contracts with about all 5 of them, where we have access to all this, and it is beneficial for both of us. We need to access, but they need as well all the transactions we handle to be relevant in their space as well.
Thank you. And moving back maybe more to the topic of skills and trainings. I mean, as a trade union, I mean, that's a central part of what you do, making sure that there's a lifelong learning and that you can get skills and competences in your work life. In the financial union in Norway, how do you work with making sure that financial employees get the competences they needed and keep up with the digital pace? And also if you have an example on a project that you do on this topic.
Yes, 1, 2, 3, 4, 5. No, well, I cannot stress enough the need for competence and lifelong learning. And it's not only about helping our members to get more knowledge, it's also to use our political voice into the government to do something to help the transition. This is not only for the financial sector, this is for many other sectors as well. But if I should mention some things that we do, actually, we use quite a lot of money on developing our members and our union representatives. So we have an own program on digital transformation. We have an own program on fintech. We have an in-house developed program on artificial intelligence. We sponsor various of studies that the members can choose from that fits with the company's needs. So we talk to the companies and we talk to the members and, okay, what do you need? We can chip in $1 or $2. And if you chip in $1 or $2, this will be great for the industry and it will attract people into our sector. We also do webinars, of course, and actually just as we speak, we have a joint webinar with the group Digital Norway, it's called, where we are discussing the fintech and the future of fintech, but also we are discussing crypto art. So we are moving fast forward, and it's a great interest by our members to attend these small programs. They can be large or small, like 1 hour, and they can be for 6 months. So that's the way we do it in our organization. But it's both politically towards the government and also to the companies and also to the members. So it's a 3-party kind of deal, which has been working good with the Nordic model again.
Great. So Petra, you're also in this, as I referred to earlier, you were calling for member states to make sure to design and implement active labor measures, enabling workers who lose their job to take up new jobs. So also from a trade union perspective, how do you think that the finance sector can work best to create digital skills, but also make sure to, as Renata mentioned in the beginning, if someone is laid off, how can they get back to another job?
We asked the European Commission to support the member states to make money available for this type of training. But for the banking sector and for insurance sector, it's much easier for other sectors from the economy in dealing with this topic, because the people from the banking sector are really computer literate. Yes, it's not necessary to explain to them where is the button to start the computer. No, we are not talking about these stuffs. They are specialized in dealing with complex application inside the banking mechanism. So it's easier for guys like my Romanian colleague to go to be trained on coding and to work for a fintech company. Some of them already have certificates on this type of training. So it's not very complicated. It's not, let's say, a problem with no solution. No, we can work in this way that these people that no longer find out jobs in the classic, let's say, market of banks can be trained and integrated quite rapidly in fintech sector, because they have the skills in IT that can be easier being improved and used in the other sector. I believe this because I know people working in this area that are fully fitting in this picture. But what I would like to say, generally speaking, I really enjoy what the other panelists have said. For a company, the people are the most valuable asset. In 1995, the report of the IMF on development, the title of the annual report of IMF was Investing in People. What they showed, they compared, remember, it was 1995. They compared the communist education system with the education system in Western side of the world. And they showed a graph with 3 vertical axes. On the first axis, they said, we are going to measure, they take group of students at the age 15 and included in their study, and the results was like this. On a graph with 3 vertical axes, they said on the first axis, we are going to measure the knowledge acquired during the formal education process. On the second axis, we are going to measure how much of this knowledge they are using in their later professional life. On the third axis, we are going to measure how much of this knowledge they are using in the daily life. Now, what happens? What you can see in this graph? You can see Romanians and Czech people being on 9 level, and the British people on the first axis have been at -2. And I remember that at that time in a conference, I met the professor Nicholas Barr from Oxford, and I asked him what this -2 means. And he says, the big kids of my country don't like to learn. This is the meaning of this graph. But on the second graphs, the curves almost converge. On the third part of the graph, the curves have been vice versa. And the conclusion was like this. The communist regime encouraged a huge accumulation of theoretical knowledge, not teaching kids how to use them. Now, talking about the people from the banks, in my opinion, it's easier for them to be trained. And if we come out with interesting European financial instruments, we can do it faster, and we can keep this labor force in Europe. Otherwise, crystal clear, at least a part of these people will move outside Europe, because what we discovered 4 years ago when we discussed about the fintech plan of the Commission, we discovered that all 8 European systemic banks are getting their cloud services from American companies. Now, this could be dangerous, because you imagine that all the data of a European systemic bank are in the hands of a company which is not European. And the Commission started to, the proposal of the European Economic and Social Committee. At that time, the Commission started the project Gaia X. I think one of you know this project, in which the Commission tries to build up the first cloud European company. And in my opinion, in this huge type of projects, this is the only one solution. If we had wanted to build up a company producing planes, able to compete with the global players, we put resources together and we have Airbus. In this fintech industry, competing with the global players, it's the same, very difficult. And putting resources together, delivering special financial instruments capable to finance this type of training, in my opinion, we can have a good solution to the problem. Thank you.
Thank you. Great. I think it's time to open up for some questions from the floor, if there are any. Yeah, we have some over here.
Okay, I'll start. Paula Charlin from Sweden, Swedish Bankers Association. It has been a lot of discussions regarding the differences between fintechs and larger banks. I guess I represent the larger classical banks, retail banks. And when we look at the skills, I mean, we all see the scarce of skills today and the talents on the market with the tech, within the tech industry as such, I guess. And in the fintech, in the financial area, I can't really emphasize it enough, I guess, for our members. Those partnerships with the fintechs are super high value. So and of course it goes both ways, but they are not doing it to be nice, so to say. Yes, to be clear on that. But the other thing I want to also mention, and when we talk about skills, the best education within the financial industry right now you get when you go to a fintech, because you have to learn while you work. So you find a problem and you solve it by yourself or in the team. That's what I see. So I just want to say that if we kind of, I don't, but isn't it the way, and I'm maybe heading your way to get the answer, Maurice, isn't it's really valuable to increase the focus on fintechs, to increase the focus on skills on the tech market within the financial industry?
I think in general, the cooperation between banks and fintechs is indeed very important and beneficial for both parties. And I think, for example, if we look at transaction monitoring and AI, that's an important thing we're looking at in the Netherlands, combined with the Dutch Central Bank, a couple of larger banks and payment service providers. And we all, most of our fintech PSPs don't have enough people, enough skill, and they don't even have enough transaction monitoring to put people on developing AI for the transaction monitoring. If I would have AI specialized skills, I wouldn't put them on transaction monitoring. But if we work together on that and work together in finding solutions there, then we can find enough people to actually work on AI on the specifics of transaction monitoring. And it starts to work out that way in the Netherlands. But we are a really a smaller group of banks, so it's easier to communicate with like the sector than, for example, Germany, where you have over 2,000 banks. So we do see this cooperation already helping to get skills specifically on for example, this AI in a more cooperative way. Yeah.
Question that, you hear me?
Yeah,
we can hear you.
That is somehow related, but it is more on, let's say, on the institutional aspect of what you're saying. It says that, it appears crystal clear from our discussion that there is a strong point in cooperation, in working together, and working together on real problems, putting together not only skills, but also data, like Gaia X, for example, and also data analysis or AI. No? This is clear. And it is clear that we should collaborate across industries, between academia and the industry and so on. But a question comes to my mind that is more institutional, no? And I'm asking Pedro in particular about the European Commission. It is the issue of fintech hubs, no? Because the European Commission and different agencies do promote, have been promoting the concept of fintech hub or innovation hub in the different member countries. But for some reasons, this was not taken up to the scale of the European level, to a European fintech hub. So I'm asking, ideally, it would be nice to have a situation like the one in Norway, in which there is a true ongoing cooperation at the whole level. So why isn't the European Commission pushing the idea of EU fintech hub?
The big dinosaur moving slow. This is the issue. Of course, the Commission wants to solve this type of important topics. But Commission, it is in between two co-legislators, yeah, the European Parliament and the Council. And usually it's very difficult to build up important projects based on important amount of money, because, it's very difficult to convince, especially the member states, to get involved together. This is history. Of course, we learn from the most intelligent species which are living in nature that cooperation is the key. Capitalism is not based on cooperation, it's based on competition. So this is the issue. How we will be able to put together resources available at the European level. Now, a big discussion in Brussels, it is about how to increase the budgetary resources of the European Union, coming with some intelligent proposal on taxation. But the key issue is to convince the member states to agree, first, to agree with this topic, and to agree, in my opinion, to change the stupid method of decision at the level of the Council, which is unanimity with the qualified voting majority. If we are moving in this way, in my opinion, Europe has everything it's needed to solve this type of problems. We have it inside. Coming back to digitalization and discussing about knowledge and people, go to YouTube, look to the movie, Mounting Gox. Did you know about Mounting Gox? And what was Mounting Gox? The biggest corporation, Japanese corporation selling Bitcoins. Who was the CEO of this company? A French guy, specialized in coding. Why he left Europe and went to Japan to work there? Because probably in Paris, nobody looks to his competencies in coding. But it is true that even in this world of digitalization, why same activity, same risk, same rules principle, it's important. It is important because as any other kind of thing that human being created, digitalization supposes risks, and we have to pay attention. This guy, this brilliant guy, Frenchman, lost 800,000 Bitcoins, valuing more than $1 billion US. And imagine the level of skills he had. When the Japanese police arrest him because the clients of the company came and asked for the Bitcoins, which disappeared. First, the police put him in jail. And when they try to understand what happens around, and they don't have the skills to understand what's happened around, they just get him from the jail, put him back in the office and says, now explain to us what's all about. Short story. I tried to change my short story. I tried to change my debit card to European Systemic Bank. Being Romanian, having an account in a branch in Brussels of a Dutch bank. 3 months discussing with artificial intelligence, I was not able to get my card. What I have done finally, I put a question to the robot that the robot couldn't understand. And he says, sorry, I don't understand your question. Now I will transfer to you to a counselor.
Thank you for the short story. I think, so we maybe let the others also get some final comment here. I think if we start from you on what a takeaway from here on what we need to improve the digital skills, if you have a good example from Norway or something.
Yeah, well, there are 3 things I think it's important. It's the kind of nature this is actually. This is businesses, but it's kind of nature. It's a symbiosis that needs to work together. That's the one point. The other point is that knowledge is power. So if you have the knowledge, you have the power to move forward. And then the third one, since I've not spoken a lot about the trade unions, but the trade unions are kind of important to making this happen because they are the facilitators and they're also the knowledge communicators. So I think that's what sums up what I would like you all to bring with you back home, those 3 points.
Great. Maurice, do you have some takeaway?
I think what would be interesting as well, if we look at what knowledge we need, and especially if you look into the compliance skills, that we should also look in how we can do it more efficiently. For example, if you're now selling on the marketplace with us, we do a consumer check on you, complete check on your CDD, on your customer due diligence, but it's already done by your bank as well, and it's already done by your insurance as well. So we all do the same, and we have all the same kind of peoples in skill doing the same work over and over again. We can make it much more efficient there, and it also needs changing in legislation from a European level. If you realize we are trying to be more effective on financial crime issues, we need to work more together, but also solve this on a legislation level. That will help us get more of the job done by less people.
Yeah, thank you. Didier?
Yeah, it's a very broad question, and to come to your point, Maurice, indeed, I think everybody's aware that the financial system is getting more and more important, and as such, banks and financial institutions and fintechs will also be positioned more as gatekeepers of the financial system, meaning they need to protect the integrity and they do all kinds of checks and screening. And also from a bank's point of view, it needs to happen sometimes multiple times, which causes a lot of troubles, especially if you want to introduce instant payments, for example, where if there is a positive hit, you don't have within the 10 seconds time to correct it. But if you look at a more broader perspective, I think to come to the core question, I think the challenge will be to try to predict what type of skills we will need in 10 or 20 years from now. We also now understand, okay, we need now digital skills, whether that is. So there are parts of continuous education within banks, and we also try to educate our employees. But I think it's more, and in fact, we will probably not know exactly what we will need in the time. So it's probably not to focus on specific skills, but more some kind of adaptive approach to educate the youngsters of today to be adaptive and to be open to change in whatever they need to change in the future going forward. I don't have the crystal ball, don't have the clear answer to that, but maybe start already at the basis of the people who are at the primary school now, for example. But maybe you have better ideas.
Yes, some final comment from you. Yeah.
Well, when I think, why do we need trade unions, particularly in the financial sectors, is to fight for decent work environment. And decent work environment is safety, social security, decent wages. But I think when I think about reskilling is that we also need trade unions to fight for integration, strong integration of reskilling and upskilling into the work trajectory and time of the work. Because what I could see when I was researching the financial sector was this pretty idea of lifelong learning is starting to impinge on this, work-life balance, because people put a lot of effort, time, and money into reskilling. So we are treating people, as if they were this Captain Minhausen you probably heard of, that he pulled himself by his own hair and his horse out of the swamp. And we individualize risk that is structural, and we give in to cruel optimism when we tell people that they should reskill, that should learn, that they should put a lot of effort into it. But this should be a structural solution, and trade unions, particularly in financial sectors, are key to this problem.
Great, thank you. That will be the last words of this panel. Thank you so much for your time and your very engaged conversation up here. So thank you.
Thank you.
Thank you.
there, should we take this away? Or, so then I have Peter, I will start with you, and then I will have, so maybe we could put Louise also then in the middle. We take the women in the middle. So. Do you want some water? Okay, great. So nice to see you also from this side, and it's
Parfait, c'est un plaisir de vous voir et nous sommes ravis d'être là. Voilà, nous avons la grande responsabilité d'organiser cette dernière session. Je suis Karin Alström, secrétaire générale de la Nordic Financial Unions, qui sponsorise cette session. Qui sponsorise, pardon, ce projet. J'ai pu suivre ce projet depuis le début et je suis absolument ravie que nous puissions être présents ici dans une réunion présentielle. Je dois avouer que je m'étais un peu fatiguée à force d'avoir uniquement des réunions virtuelles. Alors, nous avons Peter Kerstens, conseiller en innovation technique et cybersécurité chez DG FISMA, Ella Schoden, directrice police et affaires publiques chez Finansförbudet, Louise Grabo, secrétaire générale de l'association suédoise des Fintech. Vous voulez dire quelque chose? Et nous avons Morten Holm Bundgaard, qui est consultant en chef auprès de l'Association des employeurs danois du secteur financier. Alors, nous allons poursuivre. Je vous demanderai bien sûr de vous présenter un petit peu plus en détail dans quelques instants et je vous demanderai également de me parler exactement des liens que vous avez avec le secteur. Pardonnez-moi, ce monsieur s'exprime, mais je ne l'entends pas. Le micro de M. Kerstens ne fonctionne pas. Ah, nous y voilà. Nous représentons près de 170 entreprises au Danemark, du secteur financier, du secteur des assurances, du secteur des pensions.
More than 60,000 employees. So we know the companies, and we talk to them every day. And we're a classic employers association. We negotiate the collective bargaining agreements and stuff like that. And I think that the financial sector in Denmark is characterized by, I think it's been said a few times today, it's been characterized by, it's the mind that does the work in the sector, and we live on knowledge, and that's true. So that's why we also have a big emphasis on that from the employer side, and we all know that the people who thrive and people who have the right competences produce well. So that's of course the objective for us as well. So very interesting also to see the development of fintech sector in Denmark with the fintech hub, and we also provided some information for the project, and it's been very interesting to read. So thank you for that.
Thank you very much, and I will get back to you on more of the contents of the agreement as well, because that's really impressive what you have done. So, and will I now give the floor to you, Ella, to introduce yourself? I do a bit, yeah.
Yes, thank you. So my name is Ella, and I work sector policy issues, and my microphone is not working.
No. Okay.
And you can hear me now? Yes. Okay. Perfect. Thank you. And I also have a background in working in compliance and AML, anti-money laundering for the finance sector. And I worked in trade unions on Swedish level, Nordic level, EU level for many years. And for the finance sector union in Sweden, we have around 32,000 members, and they mostly work in banks, but also other financial institutions. And I did have the privilege to join the steering group of this FinTech project during last year. So I had the possibility to see the project and the report to develop, which was really interesting. And I do follow the development of FinTech quite closely in my work, as it is so interconnected with the rest of the finance sector. And we, of course, see the innovation and the technological development as something very positive for the finance sector overall, both for competitiveness, but also for creating an attractive workplace, of course. And then we, of course, believe that collective agreements and social dialogue is something that really helps to create a sustainable finance sector, and something we, of course, want to see throughout finance, of course. Yeah, and I think I can also say that we do organize some niche banks and FinTech companies, and we do have some members working also in FinTech. I think I'll stop there.
Great, thank you. So Peter, let us have a second try and see if your microphone now is functioning.
Okay, is it working? It seems to be working.
Perfect.
Okay, very
Great.
good. So I am Peter Kerstens. I am an advisor at the DG for Financial Services Regulation at the European Commission. Now, advisor is an aspirational title. It creates the impression that I've got something to advise on. I'm working on that, but I'm working on being one day an advisor on digital transformation of the financial sector. I chaired the European Commission's task force on financial technology, and I like to take pride in the fact that I'm trying to change the policy direction at the European Commission from an almost singular focus on financial stability in towards a focus towards digitalization and digital transformation of the financial sector across various types of technologies and, of course, various verticals in the financial sector.
Great, thank you. Welcome to you as well. And Luis, we have the same title, and my mother always says, yeah, but secretary, what is that actually? I was like, yeah, but there are some, this is the phrase that is used, and even the General Secretary of the UN has the same title. So I try to explain to her that it's not just admin, although some of it is. But welcome to you, Luis.
Thank you. Yeah, when people ask me what I do, I say it's a bit of everything because I'm one of two persons working for the association. So we're still like a very small association, but we were founded in 2017 and we represent FinTech companies in Sweden, and we advocate for their interest. And we have 80 member companies, and they're within payment, lending, crowdfunding, crypto, a bit of everything, So yeah, that's a bit about the association. We of course have like the big players as Klarna and Trustly and Tink and some others, but we also have like smaller startups that want to be a part of our like association. Yeah,
great. Thank you. Thank you. So the challenge for our panel is to kind of predict the future. How will the future look for the FinTech, and how will it be organized? So it's kind of a thought-provoking theme, but we can also be quite open and broad. And I encourage you to also comment on each other's remarks if you like. So, but I will first turn to you, Peter. So one challenge for the FinTechs in the EU is that they find they don't have the same opportunities in the market as the traditional players. At the same time, the traditional players, they are of the view that the FinTechs, they have like an advantage because they are not so regulated. Could you please tell us where is the truth in all this?
Well, there's a bit of truth in both sides. Now, we get confronted a lot with requests and claims about the level playing field. And people say there is no level playing field. Now, a level playing field is, of course, an idea which comes from sports like soccer or basketball, where the playing field is flat. But maybe the game we're playing isn't football.
Puede ser que a lo que estemos jugando no sea fútbol ni baloncesto, es el golf. En el golf hay gente con diferentes niveles que puede jugar juntos. O puede ser que sea el Tour de Francia. Si eres un ciclista musculoso y potente, pues tendrás ventaja en los terrenos planos. Pero si eres más pequeño y con menos resistencia, pues tendrás más ventaja en las montañas. Lo mismo pasa aquí. No hay grandes bases de consumidores y esa es la ventaja y la desventaja, por un lado, para las nuevas startups. Las organizaciones financieras grandes tienen la ventaja de ser más grandes, con una base de clientes más sólida, pero tienen una desventaja, que es que tienen tecnología e infraestructura que está afianzada y es muy difícil de cambiar. Las organizaciones financieras grandes dicen que las fintech tienen ventajas, las fintech dicen que las organizaciones financieras tienen ventajas y yo creo que la realidad es que ambas instituciones tienen ventajas y desventajas. La respuesta es que depende entonces, ¿no? Depende un poco de dónde estés en el terreno de juego. Voy a cederle la palabra a Luis. Como hemos visto en los informes por países, ha habido un aumento de compañías fintech en Suecia. Has mencionado algunos de los desafíos en su trabajo antes. ¿Cuáles son las claves para el éxito de las fintech en Suecia? ¿Qué tipo de obstáculos ve para el crecimiento del sector? Los factores clave para el éxito. En primer lugar, tenemos Klarna, que tuvo éxito muy rápido. Es una especie de unicornio porque hace que venga mucho talento a Suecia. Es una de las compañías fintech más interesantes en el mundo y está recibiendo mucha inversión actualmente. Tenemos muchas personas que han venido a trabajar para esta compañía. Una de ellas ha empezado su propia compañía y esto crea sinergias, un círculo virtuoso. Esto ya lo he mencionado antes, algunas reformas que se produjeron en los 90, como la que se hizo para que las personas tuvieran un ordenador en casa, y creo que este tipo de medidas ayuda en la digitalización y esto ha permitido que ahora haya un buen campo de cultivo para las compañías tecnológicas. En Suecia además hay una sociedad que no está muy convencida del dinero en efectivo. Un 9% de la población utiliza efectivo para pagar en contraposición a las personas que utilizan pagos electrónicos. Esto ha fomentado que hayan crecido las fintech. Yo empecé a trabajar para la asociación en 2018. En ese momento había unas 200 asociaciones. Después de 4 años tenemos 500 compañías. ¿Qué ha pasado en este tiempo? Pues se produjo el PS2. Esto hizo que se abriera más el mercado y que se pudiera competir mejor. ¿Cuáles son los obstáculos y desafíos? Todos los años redactamos un informe que está en sueco y en inglés disponible en nuestra página web. Aquí hacemos una cartografía de las empresas en Suecia y de las oportunidades y desafíos. En primer lugar, la infraestructura financiera. Esto está relacionado con lo que habéis mencionado de un terreno de juego igualitario. No es fácil operar dentro de una infraestructura construida por los bancos. Es difícil competir cuando el que tiene la infraestructura es otra persona. Si, por ejemplo, Volvo hubiera sido el propietario de las carreteras en Suecia y de repente viene Tesla y quiere conducir en las carreteras, pues no hubiera sido posible. Y esto es lo que vemos nosotros. Por otro lado está la regulación. Las autoridades competentes y la supervisión no entienden este nuevo modelo de negocios, con lo cual esto complica la entrada al mercado y la competencia. Evidentemente, esto en otros países europeos es diferente. Por ejemplo, algunos reguladores están más a favor de las fintech y otros menos. Nos gustaría que hubiera más unificación en tema de regulación. El cuarto desafío es el talento, son las habilidades. Falta personal cualificado. El 93% de las compañías dijeron que necesitaban reclutar nuevos talentos este año. ELA, su sindicato ha sido uno de los que han fomentado el crear esta sociedad de pagos digitales, así que forma parte de esta historia de éxito. ¿Cómo se han visto los miembros afectados por el desarrollo de las fintech? Hemos visto que hay unos 6.000, 10.000 nuevos puestos en el sector. ¿Cómo ha sido este impacto en el sector y para sus miembros?
Is also done in traditional finance today. And I think that we will see an increased mobility between these types of actors. And I also think that if you add on the acquisitions between these actors and also the close partnerships, I think we will see more movement and mobility and recruitment within the finance sector. And then, of course, I can see how fintech has really helped to push innovation forward and really also push the traditional actors to really accelerate their own innovation. And of course, we have as one of the results that we have new type of competence needs. We have new demands for skills throughout the finance sector. We talked about it in the previous panel. That there's a high demand for IT skills and mathematics, etc. And I think those competence needs are today actually quite similar, whether you work in fintech or whether you work in traditional finance. There's a really high demand for those skills. Yeah, I'll stop there.
Great, thank you. And Morten, you're part of the example that has been introduced by the researchers today as really the guiding star for others to be inspired from. So you have Lunar Bank, P27 and Nordnet that created together an employers organization. Can you elaborate a bit on that, and why was it needed to have a separate agreement? Why couldn't they just go in with the traditional financial sector union agreement that you already had?
Yeah, so it's a good question, the future, and I don't have a wisdom ball or anything with me. I forgot it at home. So I won't give any big answers, spoiler alert, but I would love to elaborate a little bit on your question here, Karen. We have an employers association as a member of our organization, and it's actually a little bit of a history story, because it all started in 1899 in Denmark with the agreement on how we solve issues between labor relations in Denmark. So fast forward, I won't bore you with the details, but fast forward, and it's a model that works. It's the Danish model, of course, I'm talking about. And what we do is we sit down with the employee side, and we talk about terms and conditions, and we do it fairly often with a few years in between. And it's a good model because it works for both parties. It works for the employers and it works for the employees, because we can set the boundaries, and of course you all know this, so I'm just talking out from a history perspective. But returning to your question, Karen, why do we need to have it organized like that? But I would love to turn it around and say our standard collective bargaining agreement is, I think it's 257 pages long. It's built upon iteration and iteration. And the new framework that has been presented here today is, I think it's 14 pages long. And when you're in a fintech, you need to take care of what is important to you, and that's what the collective bargaining system and the Danish model does best, because you get to debate what is close to the business model and close to what is important for you. So for us, it's more of a debate of one size fits all, and it doesn't. It depends on what company you are, and that's what's great about this framework agreement that we've made, is that it allows for local adaptation to fit in with the business model that the companies have. So I think that's why it's interesting. And of course, the key word is flexibility for us. And the employers, they see the flexibility of the agreement. And I'd love to elaborate, and I can go on, but I'll just stop here.
Great, thank you. Yeah, 257 pages. That's a lot to handle, I think, for many smaller organizations. But I'm sure there's a lot of content in it, of course.
Of course.
I have to say this. So, Peter, if we go back to the EU level, how do you measure the impact of fintechs? Have you seen it as disruptive, as was talked about earlier? And in the report as well, there is a rephrasing of competitive cooperation, which they say competitive interdependence. It's a nice word, which I just learned, thanks to you. But could you describe a bit how you see the entrance of this? From the start, it was a small thing, small sector, but now we see that it's quite big in many countries.
Well, if we look throughout Europe, what we really see with fintech is not that it is disruptive, but it's energizing. It is really lighting a fire under the traditional financial sector, who might otherwise be much more relaxed in their attitude. They have their customer base, and the customers are more or less happy or unhappy, but they're not going to change. And it's because you have new entrants with new business approaches, sometimes new business models, that are creating some competitive pressure and that are energizing the larger dinosaurs were mentioned earlier, the dinosaurs of finance, into also moving forward. And these dinosaurs of finance have a real challenge, because they also have to serve their existing customer base with existing expectations. So many of these customers aren't at all interested in all of this digital stuff. And so if you are a large financial institution, you have to service that and bear the costs of that. And you have to also look after innovation and the competitive pressure or the energizing pressure coming from the fintech sector. Now, when people talk about fintech, of course, everyone thinks about the great success stories. We've heard Klarna, there's TransferWise, and N26, just name them. But these really are what I call the customer-facing, the consumer-facing fintechs. And success stories in those are few and far between throughout Europe. The reason being that it requires enormous amounts of capital and risk-taking to scale up, but also that consumer-facing fintech is a volume business. You need lots of transactions, high volumes, low margins. And we've heard it already before, most of these companies aren't making enough money to be sustainable. They're burning a lot of cash, investors' cash, but they're not getting anywhere. But if we look a bit deeper, where the real success stories lie in fintech and the energizing drive of fintech, apart from the success stories like Klarna, is that most of the successful fintechs around Europe are fintechs that are specialized in business, in value chain problem solution. They often have a solution for the mid or back office. And typically now, I'm generalizing, the fintech company very often is a few guys or a few girls from the traditional financial industry who are very familiar with a particular mid or back office problem. They can't get it solved in the organization because it's too cumbersome and so on. They team up with technologists and they provide a solution to that, which they usually provide to their ex-employers. And that's how this cooperation model develops. And if you look at that, the companies that focus on that are very successful. They're usually not very big, but they're very successful, either in their own right, they do make money, or because they end up being bought again after a couple of years by their former employers. And what we then now see is that these people sell their solution, but they're serial entrepreneurs. They say, oh, but there's another problem that also needs to be solved, and they'll start again with something else. And that is the model which we see throughout Europe as the most, I would say, sustainable and the most successful, but it's also the most invisible, because these companies deal with back office problems and value chain problems, and their brand names, you've never heard of them. These are companies you've never heard of them. Although sometimes they can become very big and very successful. For example, a company in the Netherlands, ADN, the most important payment company you've never heard of, is a typical example of that. Stripe, developed by two Irish fellows, very successful. They went into a very peculiar value chain issue and solved it, and were very successful.
Yeah. Interesting. Yeah, and we had on our board meeting last week, we had an insurtech company, and they were explaining to us that, yeah, but no, we don't have any customer care department because we don't work with the end consumer. They work only to facilitate the interconnections between different companies. So yeah, I can agree with you that not all is visible. Louise, if I turn to you next and continue on the European level, do you see a threat that maybe the Swedish and the Nordic fintechs might consider to move out of the EU or move out of the Nordics? And is there something that you would like to see from the EU level?
Well, there's many things happening on the EU level. It's the review of the PC2. It's the open finance regulation, might be, hopefully, we think. So there's some really good initiatives, and as long as they can provide a platform for innovation and so on, I think that is very good for the fintechs, both in like Sweden and the Nordics. One red flag that I have that might that I talked a bit about earlier is like the supervision, and we see that some of our companies in Sweden don't want to be under supervision. For example, in Sweden, they would rather be in Lithuania or in another company in a country in Europe. So I think that it's not a problem that they will probably leave the EU, but it's still a problem that you won't be as competitive in the rest of Europe compared to where you're having your supervised. And I can also, of course, mention the MiCA regulation. I think there might be some. Of course, the MiCA regulation is good. We need some regulation of this unregulated market with the crypto. But if the regulations are too strong, there might be companies or innovation that will move to other countries. For example, I heard about Australia that has better regulations, so crypto companies might move over there. And I think, that would be bad for innovation in Europe. So that's just something I want to say to you, but you can bring it with you.
Thank you.
Australia has sometimes better weather as well.
Yeah, might be that.
Not sometimes, always.
Always. True. If I go back to you a bit, Ella, I will also let you elaborate on the regulation. But first, one more question on the organizing side. How do you see that the sector can develop, and how would you describe the role of Finansförbundet in this development?
Well, I think we can all agree here that, I mean, fintech is quite an established part of the finance sector today. And this is, of course, because it also is so interconnected with the rest of the sector. And the report also points to how, at least in Sweden and the Netherlands, you can see that many of fintech companies actually do start to consolidate. And the actors that fintech companies are so interconnected with are, you know, the big banks especially, and they traditionally have social dialogue, and they have collective agreements, and they have very well functioning social dialogue. So I mean, one can also hope that this will inspire also fintech companies further in that direction. And I think the development in Denmark is really interesting in that way, where they also talk about external legitimacy on the market as a reason for moving forward with social dialogue. So I think that that's a really interesting path ahead. And then from our own perspective in the trade union, I think we really need to develop a lot more knowledge about fintech and also learn more about what the specifics are and what special circumstances and needs there are for fintech employees compared to the rest of the sector. Are there specific needs that we need to be more aware of? And also look back to how we can be also more attractive as a trade union for fintech employees, and also for, I mean, all finance employees. And I think this is a development that we also need to look at together with the employer organization, of course. But I think there are many, I mean, openings for further, you know, discussion. I think competence and skills, I mean, is one thing where we see similar issues and challenges in the whole finance sector. But also I think gender equality and diversity is one issue where fintech especially is a very male dominated part of the sector. And I mean, as trade unions, employer organizations, we have a lot of expertise in working with these issues. So I think that there are many openings definitely to move ahead. Thank you.
Great, thank you. And continuing on the employee organizations, may I ask you a bit about your strategy now? Are you actively approaching also other startups to try to make them also members of this separate employers organization? What is your strategy?
Coming from an agreement that's more than 100 years old, and the history I just started, it's a very traditional product that the framework provides. So in a sense, it's about providing stability with the framework agreement, because when you have a framework agreement like the one that has been negotiated, stuff like strikes it's a peacetime, and that's a core product in and of itself, and I think that's one of the key aspects. And in relation to your question, Karen, it's about having an attractive framework to provide for companies who are looking for stability and looking for these parameters. And if the organization can provide that, then I think it will sell itself when, and it is a when, companies hit the HR issues and labor relations discussions. So I think that's one of the key parameters in the recruitment or that. But yeah, I think that's probably one of the interesting things. And I also, it's something you said as well with it's an innovative sector, and there's a lot of fintechs who originate for somebody who's been in the sector or change jobs, and it's also people change job in the fintech sector often, and you don't stay the same place for long necessarily. You can, but and I think that taps into the trends we see in the financial sector other places. So how do we handle that as an employer organization and also employee side for that matter? That's one of the issues that are interesting, and I don't have the answer, and it's definitely worth a debate in the future.
Maybe you will start doing joint marketing campaigns to the fintechs in Denmark.
That's an interesting proposal.
Yeah, it's free. So I will go back to, I think I will change a bit, or maybe not. Yeah, let's go to Ella this time to draw back on your experiences from your previous position as well. The regulation of fintech is a lot about innovation versus risk. And with your background in the compliance and AML, how do you see this development?
Well, I think it's a really interesting and complex question for sure. And I think, as a starting point, the speed and the degree of innovation in finance, I think it's really something impressive and something that should be really supported. This development, what is special with fintech as compared to tech in other industries is that they are active in a highly regulated sector, and we cannot go away from that fact. And I of course think that rules, they need to be proportionate. You need to of course look into the activities of the company and of course the size of the company. I think that's of course key, and the rules, they do also differ whether you're a payment provider or a credit institution. So but then coming back to a level playing field again, I do think it's really important that there is a level playing field for the financial actors in the market. And then, of course, when you speak about fintech, it's such a wide concept. So you have to look at the different actors separately. But for a level playing field, why I think it's important is because of financial stability, also consumer protection, operational risks, because these actors are so interconnected. And that's why I think it's really worth stressing that regulation can also support innovation, as it can kind of remove a lot of uncertainty and risk through regulation.
Yeah, great, thank you. And Peter, a nice bridge to you is to continue on the theme of innovation. It is something that is really much needed for the EU to stay competitive. And how do you see that the Commission has succeeded in the balance between regulating risk and still fostering innovation when it comes to the fintechs?
Well, whether we've succeeded or not, I think the jury is out on that, but we're trying at least. And we try by what we call in Brussels, in very bad English, by enabling regulation. Mm-hmm. If you look at financial services policy over the decades, sort of, I'm much older than I look, so I can remember that. It's in the 1990s, it was all about the single market, and then it moved into competitiveness vis-a-vis the US. Then the financial crisis hit, and everything became about stability. And we're now really at the tail end of the stability era, and policy is moving into digitalization and sustainability. Those are going to be the driving themes of financial services policy. Well, they're already now, but for the decade ahead at least. And but I said before we had stability, and before that we had competitiveness. When the financial crisis hit in 2008, 2009, most of my colleagues were very competitiveness focused, and that became very unpopular. Like, you couldn't mention competitiveness, that was not civilized conversation. You could only talk about stability. So now it comes back, and innovation and competitiveness go hand in hand, because we need to innovate to be competitive. We need to innovate to move ahead, because not innovating and not competing is extremely destabilizing. I believe in the bicycle theory of the economy, is that you need to pedal to go forward. If you stop pedaling and you stop, that's not very stable. So, and stability has the risk of becoming inertia, and inertia is bad. So you have to be pro-competitive, pro-innovation, because when we look at digitalization, the different technologies, yes, we do know that there are certain risks in them. Data risk, technology risk, operational risks, which are more outspoken than in what I would call analog finance. But the opportunities in terms of new business models, customer experience, operational efficiency, far, far outweigh the risks. And so we have to be focused and realistic on the risks. There's no such thing as a riskless society. If you don't want to take any risks, never leave your house because you may get run over by a tram or something else. And if you stay in your house, that's very risky as well because the air gets very bad and so on. So you may, so there is always risk in life, but you have to be realistic about that risk and always make sure that the opportunities and the advantages that you are enabling outweigh the risks that you run. And here I would say that we are moving forward and we're being relatively successful, especially if we look at, for example, the US, but also Asia, because we regulate according to our values. Asia is not very popular when it comes to promoting particular values which we hold here. The US has a single market by its very nature, although a lot of financial regulation is actually state-based. But what we do see, something that American firms have, which is not available in Europe, is that American innovators see things big. We see them all the time, and they come with a solution. Most of the time, it's half-baked technology combined with a great business idea and a lot of they say, this is the best thing since sliced bread. This is the solution for the world. That's a typical American entrepreneur. And then we have the typical European fintech entrepreneur who comes to us. And I must look around the room. I'm not going to try to offend anyone, but it's someone from either from Turku in Finland or from Lisbon. And they say, we have a wonderful solution here. And this is the solution for the southern part of Finland. Or people in Italy say, look, and we may even go to Rome with this. Look how adventurous we are. So they don't really see it big. Now, the technology almost always is far better what the Americans have. It's because Europeans are much more detailed, and it's the best that there are any Germans in the room. The Germans are the best when it comes to technology. They've researched it. It's absolutely perfect. But the implementation isn't there. The business idea isn't there. Whereas the Americans, they just sort of put it out there, see how it goes. If it fails, it fails. Be prepared to run the risk and correct it on the way. Another thing which Americans are better at from competitiveness point of view is that they see compliance. They don't emphasize regulation as much as Europeans do. And I don't really think regulation is all that important. If I look, there's lots of companies come and talk to us about regulation, but the most successful companies never do. They never come and complain to us about the regulation. They just deal with it and they'll just get on with it because they say those regulatory ideas, no matter how bad or how crazy, that's the least of our worries. Like if we want to conquer the world or conquer Europe, we have bigger problems and we have bigger ideas. So they get on with it. Whereas I do also see a fair number of companies that are hiding behind the regulation a bit, such as, well, we would do this, we would be very successful for this if the regulation would be a little bit different, or if the regulation would be a bit like that. To which I usually have to say is that, look, the European Commission can only propose. We're at the mercy of the European Parliament and the Council who decide. And the regulation may not be ideal for you, but it's not going to change anytime soon. Like we will be looking at PSD2, there's likely, but I'm not certain, going to be a PSD3. But by the time that's going to be a market reality, we're going to be 5-6 years down the line. If you're an innovator now, you're not going to wait for 5 or 6 years. Take a gamble that in 5 or 6 years' time, the rules will be more suitable to you. You go out there now, and you have the attitude, and I shouldn't say this as a European Commission official, but I'll do it anyway, is to innovate first and ask for permission later. And that is really what we see the most successful companies in the world doing an awful lot of. Look in other sectors. I'm not saying that they're very popular with the trade unions, but look at Uber or Airbnb. Is that they did not go through sort of say, well, what do the regulations say here and are we allowed to do that? They said, we have a great idea. Well, some people didn't think it was such a good idea, but they put it out there and it worked. And the technology is not really that sophisticated. They just use existing technology and apply it to a new idea.
Yeah, interesting. So we will take on your advice to innovate first and ask after.
and ask for permission or forgiveness later.
Yeah, that's a good point.
I will tell my members.
Yeah. Would you like to comment, Louise? You have been making some notes.
No, I just think it's very interesting. And I also think connected to like a regulatory sandbox, that's a bit of the purpose with a regulatory sandbox, to actually let the companies innovate first and then regulate. We don't have it in Sweden, unfortunately, but they have in the UK and other European countries as well. So yeah, we think it would be good to have it in Sweden as well. But I think, yeah, I think it's a good idea, of course, and regulations could also be a business opportunity. We have companies that are taking the AML, like the regulatory parts of the AML and the compliance, and making business models and techniques for making it easier with the reports and so on. So it's also a business opportunity. Yeah, so that would be a short comment.
Thank you. And Morten, so I come back a bit. You can also, if you like, talk about regulation.
Sure.
I realize I just, everything that is about organizing comes back to you. But do you think it will be easier, considering if it's now difficult? I'm not sure whether you agree, but will it be easier to organize the startups when they have become more mature? Do you also see this way of being a more mature company and then maybe taking on some more responsibilities and being how to say, trovärdig? I don't have the word in English at the moment, but
I get the gist.
Good.
Yeah.
I don't see that much of a difference between scale up and startup. Of course, it makes a big difference if you are 1,000 employees or if you have 10, and also it's also a difference if you're a two-man operation working with a great idea and hopefully stealing all the good thoughts of our American entrepreneur friends and taking the business case and bring it further. Very interesting point, Peter. Thank you for that. But from an HR perspective, there are always, once you become quite a few people, more than 10, we traditionally see it's the same issues you have to handle. You have to have a model for that, and there's a lot of ways to handle it. We provide one way. Well, the framework does. So I think that would be my answer. It's not that easy. It doesn't really matter, but there are a lot of traditional issues that arise when you start up, and we hope we have a great solution here for that. So that's one way.
Great. Thank you. We look forward to following the development in the coming years, both in all the Nordic countries and in the EU as well, and in Estonia, of course. But that's also part of EU, so I take it back. But you weren't on the podium. So. But we have a few minutes as well for questions, if you would like to join in, and if there's something that you have been thinking about during this session.
But if I can just continue a little bit, it was just, I had a thought when I heard the third panel about skilling, and I think there was a great point that how we can push for just-in-time competencies and talk about with the national authorities in Denmark, for example, how can we get the right competencies in the employees at the right time? How can we fit reskilling, upskilling in a busy schedule that is often something we see? So that, I think there are some challenges there that I thought was really interesting. So I just wanted to get back to that. It was interesting.
Thank you. Good point. Anyone from the floor? Or are we just so now a bit happy with the day and would like to thank the panel for a great job, for energizing the debate, and we look forward to the future in this.
Great, thank you.
Thank you.
Thank you.
Getting crowded up here with all the classes and everything. Okay, so we come to the final point of the day, the final remarks. I want to thank you all for having joined us here today. I think we've heard some very interesting points throughout the different panels. I especially took note of the need for wider cooperations between trade unions, the employers associations, fintech companies, and also academia. We also heard how there is a need to sometimes take some chances, get out there, see what happens, and then if you break something, well, you break something, but then at least you can try and ask for an apology later. But yeah, I think sometimes maybe in the trade union movement, that would also be an interesting way of trying to take some more chances sometimes. Then we, of course, also heard about how trade unions need to reach out to the different parties, as we just said. And we heard about how we need to be careful about the big tech companies in the finance sector and across the different sectors, but at the same time also not be blind to the potential that fintech companies and fintech in general can provide to the finance sector and to financial customers. I think we also heard several times that it's very important for trade unions to try and take a more strategic role in the way that they approach the sector and approach organizing in the sector. So that's definitely something that we can think about. And then I think it's also important that as the sector itself transforms, it's important that unions themselves also transform. So in the value proposition that we bring to the table, to the people working in fintech companies, I think it's important that we try and really meet their needs and their requirements, rather than coming with a standard formula of here, take this, otherwise you can't be a member. And so finally, I want to encourage you all to read the report in case you haven't already, and to share it as wide as possible. As I said, it's available on the website. We'll make sure to send out the link. And then a practical note regarding reimbursement. We sent you the reimbursement formula. You have 2 weeks to fill it in and send it back to us, and then we can process the reimbursement for your travels here. Finally, I want to thank you all again for coming to join us here today, for your questions and for listening to us. And I want to thank the technical guys as well. I want to thank the interpreters and everyone who followed us online. And yeah, just hope you get home safe, have safe flights. And there will be some refreshments outside for you to enjoy before leaving. So thank you very much, and have a nice day.